Has the Salesforce read-through, it has the NVIDIA read-through, and arguably it has the HP read-through as well. And then the other story that we covered at the top of the hour was simply the defense story, which is that Germany is looking to supply more funds and more military equipment to Ukraine. What does that do to the defense story, to the likes of Rheinmetall, Leonardo, et cetera? Those are the stocks we have our eye on in the morning.
Absolutely. So we'll keep an eye on the single stock story, but it feels like very much a macro kind of a day. Tough to be in the puts right now. You're going to see some squeezing, I think, probably in European markets. So here we go. Let's give you some ideas as to what the numbers actually look like and show you what the FTSE 100 is doing straight out of the gate in the green. We're expecting it to be up by around 0.6%. As I say, there's quite a few ex-dividend stocks. Some of those are affecting London today, so that's going to be a factor. The IBEX is up by 0.6%. We're expecting the DAX to be up a little bit more. You're going to see some of the tech names. I expect SAP could be an interesting story, particularly on the back of what we heard yesterday from Salesforce. Keep an eye on what is happening with some of the chip stocks as well. Keep an eye on some of the consumer stocks. Keep an eye on names like Adidas. That could be interesting too. So I think there's going to be some interesting kind of aspects of this market this morning that reflect that kind of macro top-down story. The CAC is up by 1%. What do names like LVMH do? There's a negative story coming out of China, but does this help? If you are selling into the United States, I suspect there probably is some positive news on that. How long does it last for? Who knows? We'll wait for the DAX to open, wait for the SMI to open, but it's interesting to see that the CAC is up, as expected, by circa 1%. The FTSE 100, a little bit of a laggard, Critty. What are you seeing in terms of some of these individual stock stories and sector stories?
Well, I'll answer some of those questions because right out of the gates, the top three contributors, no surprise here, are going to be the heavyweights, ASML, SAP, and LVMH, for the exact three reasons you just talked about. The NVIDIA read-through, likely the Salesforce read-through for SAP, and then, of course, LVMH talking about perhaps that thaw, or temporary thaw, if you will, when it comes to that trade story. But those are your three heavyweights, and they're all trading higher, contributing to the gains that you are seeing on the screen. However, it's not all good news because you are seeing some of the defensive stocks, telecom, utilities, even some of the real estate sector in the red. But this to me just feels like a classic risk sentiment trade as opposed to some sort of individual read-through as well. I'm still waiting for some of the pricing to come through on some of the defense names, but that would be the other sector to keep an eye on.
Feels a bit squeezy, probably. Some of the stocks have been beaten up recently. Yeah, market squeezing. Like out some of the positions. The puts are under pressure this morning. Calls are having a better day of things. The market's going to squeeze a little bit higher. As you say, it's the kind of the classic names that you would expect to be moving on the back of this. Luxury's doing well, tech's doing well, Schneider's doing well on the back of the NVIDIA story. The AI narrative seems to be firmly in place. NVIDIA's driving that quite nicely. National Grid is off. I've got a very strong feeling that that's going to be an ex-dividend stock, so I'm going to ignore the right-hand side of my screen until I get some clarity on that. But yeah, it's the kind of stocks that you would think will be suffering. Airbus is up this morning quite nicely. Sells a lot of planes. Ed Bastian over at Delta's got a whole load of aircraft that he wants to bring into the United States. What's he going to do with that? I'll find out on Sunday when I talk to him. But it does help, certainly, these kinds of bigger picture stories. It removes some of the uncertainty for now on what kind of happens with handbags and jet engines and aeroplanes and things like that.
Well, you mentioned handbags.
I don't know how for long.
I heard handbags. I'm going to mention another sector that we actually haven't talked about this morning, but I think we should for those beauty folks that are keeping an eye on what's going on in the beauty sector. Maybe our next guest will have a thought on this as well. In terms of the makeup, I won't ask her about the call here, but there was a big deal in the beauty space. Elf Beauty buying Rhode, which is Hailey Bieber's company. This is a big deal for kind of M&A in the States. It's a $1 billion deal. It's not too shabby for Hailey Bieber.
You know when I talk about airplanes and you just
we just
all
zone
you
out.
hear is noise.
Yeah.
That's exactly what just happened.
But the reason I bring it to our global audience is because it's moving some of these other sectors. So L'Oreal, Puig, for example, is actually higher. So there is a read-through. It's why Europeans should care about what Hailey Bieber is doing with her business. But it is risk sentiment higher across the board. Let's bring in a true market expert to talk about where we go from here. Seema Shah, Chief Global Strategist over at Principal Asset Management, joins us around the table. Seema, what do you make of the green on the screen? Is this sustainable?
Look, I mean, I understand why it's green on the screen, but I don't think this is the end of the tariff story. President Trump is going to find other means to push through his agenda. I think, if anything, it actually just prolongs the uncertainty. So while this is fairly good news, it's a risk-on moment right now. Whether or not it is sustained, I suspect it's going to be fairly short-lived. And then it just goes back to what we've had for the last couple of weeks, months, which is, a couple of up days, a couple of down days, a lot of volatility, a lot of noise. But I think this tariff situation is ongoing.
What matters more here, the trade developments or the deficit concerns?
I mean, I think they're both equally important. If anything, I think the deficit story is something which has been percolating for so long. Whether or not it's really coming to a head right now, I think is questionable, but I think it's a story which is going to keep coming up. Not just for the next couple of weeks or quarters, even next year. It's just going to be something which keeps coming through. The tariff story does have the potential to still change the macro environment. And if we were to be looking at a much, much weaker growth outlook, well, then that's going to have an impact on deficit. So I think you can't almost think of them in isolation. They are very much intertwined.
How do I get long uncertainty?
You asked me this before, and I was stuck. I mean, how do you get long uncertainty? That would be the best trade right now, because it feels like if there's one certainty in the next couple of months, it's that there's going to be a ton of noise. You said before VIX. I don't know if it's necessarily VIX, because actually I don't think the VIX moves as much as it would before. So from my perspective, though, you almost want to take a longer term look. The noise is ongoing.
Yep.
We are trying to look at the macro fundamentals. Where are tariffs going? How bad is the story going to be? So we are expecting an economic slowdown, but we're not expecting recession. We think that earnings growth can be okay. There's still some fairly interesting stories out there. Even the AI trade from NVIDIA just gives us a bit of optimism. So from our perspective, you can still get positive returns this year. It's just going to be something which is fairly volatile, very erratic, but it will be an upward sloping move in the end.
For US equities?
For US equities, I think it's going to be the same thing for European equities, maybe even potentially stronger. But I think actually maybe with a bit more noise around Europe, because there's been so much positive news just already priced in for Europe. And the weak growth story is still to be priced in by markets. So I think you could get some weakness coming through in the next couple of months. But in a long-term story, I think everything is a bit more positive. How
are you factoring in the dollar? Because if I'm a European investor, it really matters at the moment.
It does.
I keep asking this question, but how much of a headwind is that going to be for investing in the United States?
So I think if you're a European investor, the fact that the dollar has moved how it has, and obviously the euro having strengthened, it really does make investing domestically that much more attractive. And there's a lot of reasons to be thinking about domestic investing right now. I was in Berlin a couple of weeks ago. You see a really, really similar story, which is when you look across the whole environment, if you're looking at over kind of a 1 to 5, 10-year horizon, things look more positive, and actually the currency just adds to that conviction. We are expecting further dollar weakness, nothing very, very significant, but I think there is a narrative in play around the structural factors around the US, which is likely to persist for a bit longer. Now, we're not expecting by any means a very, very weak US dollar story. It's still the reserve currency of the world. There is still no alternative, but that structural weakness is still to come through.
You talk about some sort of slowdown on the horizon, and I'm curious what that canary in the coal mine is to say that slowdown has arrived, taking the trade narrative out of it.
In the US? Well, look, I mean, I think the data is not giving us any sign that there is any weakness on the horizon. But I think we have to assume that, like, with all the uncertainty, there has been a shelving of business plans. We do a big survey of small businesses, and we're hearing a very similar story across the US, which is small businesses have found the last couple of months fairly challenging. They're not like letting go of labor, but they are, feeling the pressures on their margins. This has to feed through to the US economy. It doesn't mean recession, but certainly it does to us suggest that you're going to see a further slowdown. We're expecting, for example, this year for US growth to be about 1.5%, an annual growth rate.
So the reason I ask that is because, and just follow my train of thought here and tell me, plug holes in it, please, is that if you start to see this tariff volatility, ultimately the way it shows up for a lot of these consumers who've been or buyers, I should say, companies that have been front running a lot of those imports, et cetera, is that ultimately that inventory they've built out runs out, or they have to deal with something very quickly. So that volatility I understand, but there's also a question of, does the Federal Reserve come to the rescue? Do you have some sort of emergency rate cut come in? Do you have emergency measures come in? Federal spending or federal subsidies that kind of come in and do that? Is that a real possibility that could stem some of the pain that I think a lot of people are bracing for?
I don't think the Federal Reserve is going to be stepping in. I think that it's partly because they don't need to. So unless you're really looking at a recessionary situation where the labour market is quickly unravelling, I don't think it's a situation where the Fed is going to step in. So from our perspective, when we're looking at the overall environment, what they're confronted by is economic data, which is still fairly robust. Soft data is absolutely, it's weak, but actually you're seeing a bit of a recovery. You're seeing inflation, which is still above target, and it's expected to increase in Q3. And then you have a ton of uncertainty.
Yeah.
And in that environment, there's so much potential for a policy misstep. It almost makes more sense to stay on hold. And certainly from our perspective, we're not expecting any rate cuts until Q4, and even then, only one this year.
Can I invest through this period, therefore? There's a lot going on there. Can I invest sort of continuously, or is it more important now to pick my moments? Do I need to buy dips, or can I just average it? How do I, if I am going to put money to work in the market, how do I do it mechanically?
Yeah, well, look, I think it's a really important question, which you get this a lot from clients at the moment, which is, at this point in time, when you don't know what the next headline is going to be, even on an intraday basis, there's just continuous headlines.
Yep.
That picking the perfect moment, even in a normal time, is impossible. In this situation, is even more difficult. So you're going to be either lucky or you're going to be very unlikely. Most likely, just typically that's the way things work out.
Yep.
So having a dollar cost averaging into the market is probably the most stable way of doing this. We do believe, as I said before, we are expecting this year to still be a positive return year, but nothing like we've seen in previous years. So you do need to have exposure to the market. Think about sectors, of course, but a lot of stuff, if you can be able to pick individual stocks, is really going to be about balance sheet power, pricing power. What is the brand? What is the strength of the cash flow?
Yeah.
So I think all of that is going to still come into play. And certainly from our perspective, our preference is still for higher quality assets because we are expecting a slowdown.
What does diversification look like in that kind of, just putting another kind of factor on top, how do I, if I'm dollar cost averaging, am I doing it just sort of, am I doing that on a very diversified basis? Because if it is so uncertain and I don't know kind of which asset's going to be on any given day, how do I do that? How do I make that work?
Yeah.
In terms of my timing's the wrong word, but do I just go by sort of everything continuously and hope that it all evens out? That's me. Am I buying gold? Am I buying?
The first thing to do is to look away from the headlines because you're just going to get swept back and forth by this. So you want to be looking away. Global diversification is absolutely key in this environment. And actually, of any of the years recently that we've looked at, this is a year which has really made a strong case for global diversification. So having some kind of exposure, the US absolutely still, Europe, pockets of Asia, even parts of Latin America, there are a lot of opportunities out there. And just having one focus on one market really does mean that you are particularly exposed to whatever the trade headlines could be. So global diversification is key. But also across asset classes, if you are able to have some exposure to equities, but also think about fixed income, some of those high quality assets, which will give you a bit of that downside risk protection. And then real assets. I think when we're looking across over not just this year, but the next 5 or 6 years, we're still thinking this is going to be a fairly inflationary environment. So having some kind of exposure to inflation mitigation, whether that's real estate or, to your point, something like gold, which does provide the additional safety backdrop. So this is a fairly broad story. There are going to be moments, there's going to be people who were thinking the last couple of weeks that, wow, that was the best opportunity to increase exposure to big tech, and maybe it's past.
So that's what I'm hearing as well. People are like, have I missed my opportunity? That's the question.
And I think that's one of the reasons why you've seen the big tech trade almost recover so quickly is because that down rating that we've had in the last 2 or 3 months on a sector which has got a lot of long-term potential has been for a lot of people the perfect opportunity to finally get their leg in. Now, when we look at tech, and I think NVIDIA certainly helped the story yesterday, was it's still the AI story is still very much at the frontier of all global productivity for the next decade or two, if not longer. So you still want to get exposure whenever you can. Picking your moments, as we said, is very difficult. So again, this is the time to be trying to average your way in and gain that exposure. And I think actually not just technology, but thinking about areas such as financials, some of the utilities, again, they have pretty strong long-term stories too.
Nice to see you this morning. Thanks for coming to see us. We really appreciate you joining us on the Opening Trade. Sim Shah, Chief Global Strategist, joining us from Principal Asset Management. Core 6 looks like this. We're going to see some green on the screen. I think we are, but not universally. As you can see, some of the safety trades. Nestle down a little bit this morning. Novo's actually softer as well, which is interesting. I need to double check on that one and see why. But LVMH, Ferrari, ASML and Schneider all having a very good day. What else has Joe Easton got? Let's find out.
So ASML, Guy, as you point out, one of the strong stocks in the chip space today, really leading the gains among the heaviest weighted stocks today. So that one up 3.4%. All of this coming through from that report from NVIDIA last night, ramping up some of the production of the Blackwell chips, importantly, and also not seeing as much of an impact from the Chinese restrictions or the restrictions on chips sold into China. There is a note from Citi saying that this report is positive for companies like BE Semi, like ASML, Infineon as well. Anyone that's exposed to the AI trade really getting a boost from that, and also the general positivity following that court ruling on the tariffs as well. A double boost for that sector today. Then in terms of some of the stocks boosted more specifically by the tariff ruling in the US, we had Adidas, Puma on the radar as well. Those stocks edging up. Remember, a lot of these companies make a lot of their products over in Asian countries like Vietnam that had big tariffs slapped on them by Trump back in April, and therefore we're seeing a continued rise for those stocks, continuing to pare that slump we saw a couple of months ago. And then autos as well. It's a similar story, but we did see a decent move in these stocks yesterday, so potentially some of this was already priced in to some extent. Though Stellantis down the bottom there getting a boost up 2.5% for that one. Autos, of course, really hit hard by the tariff impact over the past couple of years in general. Then staying in auto, something a little bit different. This is your used car marketplace online Auto Trader. It used to be that big chunky magazine that used to get delivered at our door, but now it is mainly online. But this is interesting because the used car market in the UK is absolutely booming at the moment, and this means that companies, car dealers, actually have less of a need to advertise on Auto Trader because used cars just flying out off the forecourts, I should say, at the moment. Therefore, Auto Trader, weak earnings today, the worst performer on the stock 600, down almost 10% for that one. Bit more positive in CD Projekt. This is the Witcher games, of course, and also Cyberpunk. That is a favourite of my brother's, actually. He likes that one, so give him a shout out for that one. That stock gaining 2%. It's had a poor run recently, a bit of a warning a couple of months ago, but a much better outlook today for CD Projekt over in Poland. That one gaining very nicely this morning. Finally, a share placing in Heidelberg. We've got a sale by the billionaire majority owner or the largest shareholder, at least in that one. He's offloading some stock, cutting his holding, and that stock falling 1.5%. A bit of a discount. They had a positive update yesterday, pairing the gain. Heidelberg lower in Germany this morning.
All right, Joe Easton from our equities team walking us through some of those early movers. We thank you so much. Coming up, we go right back to our top story this morning. The Trump administration has 10 days to comply with the U.S. court ruling that most of its tariffs are illegal. Well, some of its tariffs are illegal. We'll get the details and the market reaction next. This is Bloomberg.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
20 minutes into the session, stocks look like this. Up generally, pretty much across the board. A few laggards, which is interesting to worth paying attention to. The pharma sector is under pressure today, which is interesting because it could be actually impacted by sector specifics, tariffs which are not included within what we've just been talking about overnight, which is the broad tariffs being removed. So anyway, we get a reaction. It's not that big a reaction. It's certainly fading the early reaction. Let's talk about all of this. Brendan Murray, who leads our trade coverage, as well as our senior equities, markets and strategy reporter, Michael Masika, joining us around the table. Brendan, let me start with you. Now what?
Yeah, we've gone from Liberation Day to Litigation Day, basically, in less than 2 months here, and it's only created more uncertainty. There's a lot of questions right now. We don't know whether Trump will comply with the court order. We don't know if importers will be able to recoup the tariffs that they've already paid, billions and billions of dollars that they've already paid and still owe the Customs Bureau. So we'll have to see what the attitude is from the president when he gets up this morning and starts to.
I'm waiting for it to land on the screen. There's going to be a post at some point soon.
Michael, I don't even know where to start with that. Do you trade that post? When he comments, do you trade that?
No, you don't trade that. You don't trade that because everything is a headline away from going one way or another. It's a bit crazy what's going on. So like we've seen it with the 50% tariff on Europe, in, out. Now we've seen it with this being challenged. Trump is going to appeal this. He's got other ways to implement tariffs through other type of taxes. Yep. There's a lot of different things. So what do you do? I mean, again, the thing that's very important in that kind of a market is to be hedged, if you can. Obviously, if you're long only, well, you got to be long anyway. So you do your work and you're long. But if you can hedge your portfolios, if you can diversify your portfolio, that's what you have to do. And you can see hedging demand is still there. It's expensive to buy, still expensive to buy some puts on the S&P, but like it's what's important to do. Like you have to be you have to have some way out.
You have to sleep at night.
Yeah, exactly. So that's what's going on at the moment. That's what we're seeing.
Guy described this market earlier as squeezy. How much of the trade this morning is a fundamental trade? How much of it is squeezy?
So there's a bit of squeeziness because we see on the retail side, like, those Adidas, Puma, those stocks that are really likely to be hit by tariffs, they're up again. Why? Because a lot of people were short those stocks. Same with autos. So you have a bit of I'm going to buy some of my shorts back, and so you get a bit of a squeeze there, and you can see that. You can see that today. You can see that every time there's a tariff headlines. So we've had a lot of that in the past few weeks. The market is definitely still squeezy.
Brendan, one area that isn't being squeezed this morning is pharmaceuticals. And there is an expectation that we get something specific on pharmaceuticals. Is the market going to become even more nuanced going forward from here? You have the big macro, top-down, 10% tariffs, kind of everything is under the umbrella. But it feels like now we're going to be getting more focus. That is the way that maybe the administration proceeds, and pharmaceuticals look like the first and obvious place maybe that we start.
Yeah, exactly. As Michael said, there's a lot of other tools that the president can use to accomplish what he wants to accomplish. Look, tariffs are the foundation of his whole "Make America Great Again" slogan, and he will find a way to use trade policy to accomplish what he's trying to accomplish. There are other authorities that he can use. The pharmaceutical issue is one that we're expecting to happen fairly soon. The difference between that approach and the one that he launched on April 2nd is that approach takes time. There's a process that's in place. It can take months, up to a year to produce the kind of investigation that you need. So what we're going to do is we're going to go from a sort of more chaotic, ever-changing approach to one that follows a process that could accomplish what he wants to accomplish. It'll just take longer.
In theory, that should reduce uncertainty.
Yeah, in theory. But Brendan, can you just walk us through the fact that how should the existing trade deals that are afloat at the moment, we talked about this earlier with the UK, for example, are they void? Legally, are they void?
You got to be asking yourself, if you're in Tokyo or Brussels or New Delhi, why would we even continue with these calls right now until we figure out what the next step is? So you could imagine that you'll hear these governments say, "Oh, we're waiting and seeing, and we'll respond when we have more information." Basically, those deals are on hold right now. You would expect.
It's amazing. In theory, you have to change your whole strategy and develop a new one. Michael, in terms of the way that you expect the market to proceed from here, therefore, with all of this, what do we do? Do we wait are we waiting for the data? Are we positive until Cree's making the point that the hard data hasn't demonstrated anything yet in terms of the downdraft that we were expecting from all of this? Does the market just drift higher? How do you see things unfolding, both from a retail and a professional point of view?
So you see already, you look at the chart of the markets. It's like we often talk about V-shape. This is a proper V-shape, right? So we're back where we were before all of that happened. So that means nothing is priced in terms of risks. We're back to where we were. Earnings are supposed to be a bit shakier. The economy is supposed to slow down. That's a given. You have rates that are now shooting back up to 4.6%, 4.7%, right? So all of this tells you also risks are here,
but not priced,
and not in the price.
Bloomberg's Brendan Murray and Michael Masica joining us around the table, talking to us about the developments on the trade front and how you trade it. Stick with us. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
It's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation.
Bristling, I think, was the description that I've heard used most often in response to that question on the taco trade. Trump always chickens out. Not happy about that, I think, is probably the polite way of putting it. It is relevant to the conversation that we're having more broadly around the table this morning, how basically oscillations in policy coming out of the White House at the moment are causing the market to suffer a severe case of whiplash. And you can see that kind of just about across all the asset classes, and you're seeing it certainly this morning in bonds. Once again, we had them on offer this morning. You can see a lot of red on the screen. How do you price all of that? It's more uncertainty. So what is the price of uncertainty in the bond markets? How do you factor that in terms of what yield is demand? Let's ask that question to Ron Smutkin, head of EMEA Rate Strategy, joining us from BMO this morning. Good morning.
Good morning.
There's a lot to talk about. So
there is a lot to talk about.
Let's start with that. How do I... The world is increasing uncertain. Every morning we come in, there's more uncertainty seeming to be piled upon what we had before. How do I price that in the bond market? What should America pay for the uncertainty that it is generating right now when it comes to a 10-year yield?
Well, you're asking exactly the right question. I don't have exactly the right answer. But this is exactly what the markets have been trying to figure out. And this latest piece of news flow, although I guess more economy bullish than economy bearish, is just another example of the uncertainty that you go home with every night when you have a position in bond markets. And what it means, obviously, is you're going to demand either a higher risk premium or you're going to take less risk. And if you take less risk, what does that mean? It means, in a way, that there's less appetite for bonds. Right, so that's why I think we see a risk premium increasing in bond markets. It's because governments are still selling bonds. We have QT going on in the background, reducing liquidity. And at the same time, the markets are trying to price in this idea that there's this unknowable or unquantifiable, but definitely existent level of uncertainty, which means they need to keep risk low.
In terms of the longevity of that, is there now a permanent premium? The UK suffered from this, okay? So the UK had the kind of the moron premium, which we priced into the gilt market post Liz Truss.
I hope you didn't point to me for the moron premium.
No, definitely not. Is that now being applied in the States, and how sticky is it that this uncertainty is a permanent feature and needs to be constantly priced and is just with us forever?
Well, let's remember where we came from. Okay, where we came from was 14 years of QE, right, where government bond yields were suppressed by permanent central bank buying, and there's a whole generation of fund managers, traders, hedge fund managers who are used to the idea that there's suppressed volatility, the central bank will not move rates, the central bank is a buyer of bonds all the time. So even take away all this current uncertainty to do with US policy, we have to have this major exploration of what are bond markets like now, what is the price for risk, what is the price for duration without that backstop, and indeed with the opposite of that backstop. So that's why bond yields have been rising. I mean, term premium has been rising all year, and half of last year, and will continue to rise, I think, just because there's endless amounts of new government borrowing from the US, but also from Germany, because of fiscal stimulus, the UK, everywhere, and markets have got to come to grips with this new reality. And then you overlay on that the kind of volatility of the news flow. And what the markets are looking for is they're looking for a price that that compensates them for that. And certainly at the very long end, 30-year yields, because 30-year bond prices are so volatile, the exploration of where that price is, continues as long bonds head over 5%. So I don't want to blame it just on this uncertainty, I guess is what I was saying, but it's not helping.
We started off this week with reports that the BOJ and the Ministry of Finance are thinking about issuing on the front end of the curve, something the UK is thinking about as well, and I'm sure something Scott Bessent has considered. How much does that change in the curve in terms of issuance wield better or worse digestion when it comes to the bond market?
Well, I think, you're right to highlight that the issuing authorities are not just standing there and watching. They are being proactive around altering their issuance to sort of meet the demand that they see in the market. And in the UK and Europe, there's kind of technical reasons to do with pension schemes changing their approach, which mean that the bid that's always been there for very long duration bonds is probably going to be softer. So you've seen already the UK Debt Management Office has shortened its issuance profile, as you say. Bessent has said that they're not going to increase the size of bond auctions for the next few quarters, and now this BOJ thing. So they're doing what they can, right, but they do need to borrow the money. So every time you don't issue something long, it means you're increasing your exposure to short-term interest rate risk by increasing stuff shorter, quicker. So it's not costless to do that. I would say this, though, right, there are two things. One thing is for policymakers to try and manipulate yield levels, and another thing is for them to try to keep markets orderly and respond to demand. And I think what we're seeing is the second. Right? The first was QE, or the first was the Bank of England intervention around the LDI swoon. But they're two slightly separate things. I think this isn't a panic reaction from issuers. This is a response to the changing environment.
Let me bring some wonky math to your attention, if we can, and talk about the U.S. deficit in more detail. Donald Trump has campaigned on the idea that tariffs are going to fund America's balance sheet, help us narrow the deficit. You've seen the market actively respond to the tax bill that has been put through the House and is currently making its way through the Senate at the moment. Is there a world, and I appreciate this is a contrarian question, is there a world where a stronger move on tariffs, a higher level of tariffs that would, in theory, bring more money to the U.S., does that in any way offset the concerns around the deficit, simply because that is the argument the Trump administration has made in the past?
You're right. That is quite a question. There's so many moving parts in this. I mean, the thing about the bill is it's very hard to get your head around all that stuff. There is this, as you say, there was this optimistic story that somehow we could go back to a 19th century world where there's no income tax and everything is funded out of tariffs. I believe that the street doesn't think that's realistic. The issue in a way is how much debt they've already stored up.
Yeah.
Right? You could fiddle around with this if you had debt to GDP of like 30% or 60%. But the US, in common with the whole developed world, is a whole COVID experience away from that. And there's so much debt already that the room for maneuver around these things, almost everything is only at the edge. It's only at the margin. And you see that in the UK especially, with Rachel Reeves trying to find her fiscal headroom of 9 or 10 billion, on government spending of over $1 trillion. What is this?
Yeah.
This is because we're already in such a difficult situation. So I think the short answer to your question, I'm not good at the short answers, the short answer to your question is no, it's not really going to make the huge difference.
If I'm a central banker right now, do I just sit on my hands and do nothing? Should I just sit on my hands and do nothing?
I would. I think, but I'm obviously not a central banker.
No.
If you look at what happened in the Reserve Bank of New Zealand this week, that was quite interesting.
Yeah.
So they cut rates. They reduced the expected profile of rates a bit. The chief economist said, in answer to a question, are we near neutral or something? And he said, yeah, we're in the zone. And the bond market sold off. Because the bond market is not watching this next rate decision. It's thinking, are we nearly at the trough for rates? And if you think back to what happened around 2nd of April, people assumed that central banks would act very quickly to cut rates to offset this kind of
uncertainty.
And also kind of the slowdown induced by big tariffs. The Fed was very robust in saying we don't know what's going on, so we're not doing anything. Bank of England kind of there. The ECB was more proactive.
But the danger for the bond market is that we're near the bottom.
That's right. And I guess the thing about today's overnight news is we might be more near the bottom than we thought because there's less that the central banks may need to respond to, and they might wait longer to respond to. So I think that doesn't help the front end of the bond market. Is that?
Yeah, no, it makes perfect sense.
What do they need to see, though, to do that? Like, what does Jay Powell or Andrew Bailey or whoever need to see to say, this is a panic moment, we need to step in and we need to do something?
Well, you either need to see hard data or you need to see a financial markets issue. And obviously, you're not seeing it in the stock market, especially not today. There's no fire there. Where's the hard data showing the slowdown? Apparently, it's still just arriving, but it's not here yet. All we have is surveys, right?
Yeah.
So, and that's been one of the things that people have been looking at. Obviously, is the disconnect between the soft data and the hard data. So I think you have to believe what they say. And the FOMC minutes were very clear. We don't know enough, and we're in the right place to be patient.
All right, Lawrence Munkin, head of EMEA rate strategy over at BMO, walking us through how you navigate not just the trade story, but the deficit story as well. Interrelated, but also so many other moving parts. Coming up on the program, we're going to dive into the other top story this morning, which is Jensen Huang warning about NVIDIA's Chinese AI rivals becoming, quote, formidable. We hear from the chip giant CEO and dive into the company's results and outlook next.
So data's the new oil. Let's talk about the old oil, which is oil. We this week got an opportunity on Wall Street Week to sit down with Saudi Aramco's CEO. Let's talk about that. A conversation with Giovanna Versace and the oil giant's CEO from a few days ago. Take a listen.
The fundamentals still strong. If you look at the first quarter, the growth compared to the first quarter of 2024 is 1.7 million barrels per day, which is a strong growth that we have seen. The tariffs had some impact in global economy and sentiment, but still the fundamentals are strong, and we think that will continue for the foreseeable future. We benefit because we do have spare capacity, so more barrels come to the market. For every million barrels, that will have a huge impact on our net income.
have to see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
We cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade. About 44 minutes into today's session. Seeing some green on the screen. I'm seeing a pickup in the DAX, a pickup in the CAC, but on the index level for the Stock 600 and the FTSE starting to come off of their highs. In fact, the FTSE 100 is now flat. It opened higher by about 0.6%. So really keep an eye on that story. How much of it is the trade sentiment? How much of it is NVIDIA's blockbuster sales numbers? Let's go into that story. Matt Bloxham, senior tech analyst for Bloomberg Intelligence, joins us around the table. Is all clear? Is this the all clear signal from NVIDIA?
I think for now, for sure, yeah. I think obviously one of the big worries people had was how much of a headwind China was going to be with this block on the H20 chip. And I think they're going to lose more sales than people thought. So about $8 billion in Q2. People looking for about $5 billion. But despite that bigger headwind, they still came out with a full revenue guide, which was in line with expectations, so around $45 billion. So I guess when you kind of reverse all of that out, implicitly, there's maybe around a 7 to 10% beat on the underlying sales number, adjusting for that. Margins held up, 71% or so adjusted, still looking optimistically towards getting back to mid-70s by the end of the year. So yeah, I think all good. As you'd expect, very encouraging commentary from Jensen Huang about demand for AI and the NVIDIA product stack. So, yeah, overall encouraging.
He's pretty ticked off about China, though, isn't he? For understandable reasons. Effectively, we were talking to Richard Windsor about this a little bit earlier on. His sense is that market is now gone.
Yes.
Effectively. Has the market got to the point where it also believes that market has gone? Is that now in the price?
It's a good question. I'd probably say not completely, but it's kind of moving there quite quickly. It's not too dissimilar to Apple. It's maybe a bit more extreme than Apple, though. That essentially, like you say, they are probably genuinely locked out of that market. I think, to be honest, whether there'd been additional blockages from the Trump administration or not, I think personally that's the way the Chinese market was going anyway, given the advances Huawei's been making and the geopolitical tensions overlay anyway. I think Chinese companies were going to end up buying predominantly from Chinese businesses. The bigger threat, I think, to NVIDIA is maintaining their dominant position in the ex-China world. Because Huawei's clearly going to be taking its products and technology into the rest of Asia, into Africa, and so that's where probably the battleground will be, I think, for NVIDIA.
It does seem as if there's a kind of proxy war being fought in various other parts of the world between China and the United States in terms of where the technology dominance is going to come from. Matt, great stuff. Thank you very much indeed. Matt Bloxham, senior tech analyst for Bloomberg Intelligence. It's probably worth taking a quick look at what is happening with NASDAQ futures right now. We are up and continue to be up. On a one-day basis, we're up circa 2%. The NASDAQ 100 mini futures up by 1.1%, just shy of 1.1%. So a pretty strong set of numbers being generated out of the States on the back, you could argue, largely of what we're seeing with NVIDIA, but Salesforce actually looking fairly solid as well. I guess this is maybe where we transition into having a quick conversation about Elon Musk. Elon Musk says his time as a formal advisor to President Donald Trump is now ending. His departure raises questions about the future of the Department for Government Efficiency, DOGE, that he, of course, spearheaded and got frustrated by. Charlie Wells is here to break it all down for us. This was going to happen anyway, wasn't it?
It was going to happen anyway. He faced that May 30th deadline.
Yep.
But you talked about frustrations, and I think this is almost like an example that we always talk about of the brain drain from government to the private sector writ large, right? So, you know, you've got this really ambitious person going into government. They hop on stage, like Musk did in February, with a huge chainsaw, talk about how easy it's going to be to cut billions of dollars in government spending. And then a few months later, turns out it's a lot more difficult to do than you thought. You're a little bit frustrated, and then you start things like, you know, talking about the president's tax bill, maybe saying that you're disappointed in it, and seeing that deficit, which is something that is so not what Elon Musk wanted to be a part of, but that is kind of the framework in which he leaves DC.
And yet, people were, for a little bit, at least investors, talking about the fact that DOGE and the mechanisms that they're using to address the deficit are actually working. It was kind of pulling down that number a little bit. Are we still as positive on those efforts?
I think on that hope front first, you know, a lot of Silicon Valley had hoped that Musk would come in, that Trump 2.0 would have a very different tune to sing on antitrust. But we're seeing with this Google case working its way through the courts this week, that is not the case. Investors have been really unhappy about these issues on the deficit. They've also, kind of more specifically focusing in on Musk's businesses, they're unhappy, or they have been unhappy with the direction of the Tesla share price. And then if you think about individual investors themselves, Musk, a lot of his wealth comes from Tesla. If you go to Rich Go, the first person on the list there on the terminal is Elon Musk. He's down $46 billion this year as far as his net worth. That is in a lot of ways related to Tesla. So disappointment from investors as this ends.
Maybe he's struggling for somewhere to sleep. I think probably that isn't actually the struggle. Apparently he's just sleeping in the server room right now. I think that's what he's been suggesting. He's back in business, effectively.
That's the messaging. So it's basically turning away from DC, focusing on these businesses, and he has to, right? Because in just the past few days, we've seen exhibit A, B, and C why he had, you know, the outage at X. He had the issue with the SpaceX launch, which did not go how he had hoped it would, presumably. And then we have, you know, a number of issues related to Tesla here in Europe, for instance. BYD outselling Tesla last month for the first time ever. So a range of challenges across this business empire.
I should mention as well that investors really need to be paying attention to Elon Musk. Tesla is the 8th largest company in the S&P 500. You have 401ks that are exposed to really his life and what he's saying. Charlie Wells breaking down the Elon Musk story, both for government and for the business case. Let's turn back to the big story of the day, though, and continue that conversation in terms of what the markets are actually pricing in after a trade court in the United States has basically said that a good chunk of Donald Trump's reciprocal tariffs are ultimately illegal. Bloomberg's Rachel Evans has been following that from the market's angle. Rachel, we've been racking our brains all morning looking at this equity move. We're also looking at an FX move where we're seeing a stronger dollar off of the back of these headlines. Some of that move has kind of faded as well. We're seeing initially weakness in China off of that headline as well. How do we interpret this in the bonds and FX space?
So I think, first of all, looking at kind of just the stock side, you know, there is obviously a pop of optimism on this. I mean, and that is to be expected, right? You know, we've seen the markets really being very volatile over the last couple of months around tariff policy. So, of course, we're seeing kind of that bounce in stocks. But I think it's very telling when you do look at kind of what's going on in the currency markets, how muted those moves actually are. When I was last looking at the Bloomberg Dollar Spot Index, we were up only about 0.4%. That is not a lot, particularly when we've seen kind of the dollar really falling. And I think that tells you that people are quite cautious, really, about this news. You know, we've already seen, I think it's Goldman Sachs coming out and talking about how many other ways in which the administration could come back and implement tariffs through different means, through different laws. I've seen other analysts talking about, you know, what happens if tariffs come back in while this decision is appealed. So there's really kind of a sense in the market that these are not necessarily gone for good. And I think that's actually quite telling as a sea change in the market's sort of understanding of tariff policy. When we first came into sort of the Trump administration when he was first elected, there was a sense that tariffs were really a negotiating strategy, that they were going to be threatened but ultimately not come through. And since we actually saw those tariffs sort of implemented in April, albeit then with a bit of a U-turn and a sense that there would be some kind of leeway there in negotiation to come, I think the market has really now started pricing in the idea that tariffs of some sort are here to stay. So it's really a question now of exactly how the Trump administration kind of comes back on this ruling and how we see these tariffs kind of sort of go forward.
Uncertainty. Is it gone up or down today? And if so, what's the price of that?
It's a very good question. I mean, I think uncertainty has gone up slightly because we don't actually know when they're going to come back in again, if they're going to come back in, how he's going to do it. You know, there are certainly some interesting kind of conversations about whether the Trump administration is sort of, complying with all of the legal decisions and how they are finding interesting ways in the language to sort of circumvent some of them, shall we say, on certain other matters. So I think that's kind of an interesting thing people will be watching as well. Do these tariffs get lifted, or does the administration say, well, look, we're appealing, we're keeping them in place for now, this is what's going to happen. So I think there is kind of like slightly more uncertainty in some ways. How you price that, though, I think is the big question. Obviously, from a stocks perspective, they're seeing room to rally, but let's not forget we had Nvidia's results out last night. That was good. That's another reason to rally. But I think kind of looking at sort of the stock, the FX and bond market, you're seeing very, very small moves. So they're sort of saying nothing's changed. And you could argue that indeed, for the bond and FX market, on the fiscal side, nothing has changed. Maybe things are even slightly worse because if you take out the revenue that tariffs would have generated, the fiscal picture is actually slightly more deteriorated.
Should the stock market be paying more attention to the bond market?
Always a good question. Yes, I would say so. As someone who's spent a long time working on the bond market, I think that is often very valid. I mean, obviously, the bond market takes a much more cautious approach. They're thinking about, are they going to get their money back? Are they sort of getting enough return for the risk that they're taking? For the stock market, there's, a slightly more happy-go-lucky attitude where, if things are going up, you want to jump on that rally. And I think, today it's a very logical reaction. There is kind of this sort of immediate sort of, whiplash reaction to that sort of court decision. So of course stocks are going up, but I think sort of as we see this kind of settle into the market, let's see how long that kind of rally goes. Can it extend? Can we see sort of some of the commentary in the US suggesting that tariffs may get backed off more permanently? That would help it extend. Or do people start to get cold feet and think, actually, this is really just a temporary reprieve?
Fascinating one. If that correlation strengthens or breaks down. Bloomberg's Rachel Evans walking us through those dynamics. We thank you so much. Plenty happening in the day ahead. Of course, we're going to get monitor stories we've just talked about, which should flag some of the other data points we're going to get in about 5 minutes' time. Italian business and consumer sentiment data, but then really the focus goes back to the States. The initial jobless claims, some Fed speak, and of course those Costco earnings, whether or not people are still buying in bulk.
Yeah, do you stock up? That's the tariff trade, isn't it? Buy lots of it.
The tariff trade, the COVID trade, we have a lot of money from stimulus checks trade.
We also have a big basement trade. There are all there's various other kind of trades
big
around
fridges,
there.
I'm told.
The market's fascinating this morning. In some ways, there's a Nvidia trade on. You can see it. SML's up, Schneider's up quite nicely, doing very well. There's a tariff trade. LVMH is up, doing quite nicely. There's an oil trade, which is also up this morning. So BP and Shell are having better days. Certainly Shell is having a better day. So there's various kind of factors at the top of the market in terms of what is vying for top dog in terms of the overall narrative. In aggregate, lifting the market up, Europe is underperforming the States, but stocks are higher.
Absolutely, and I think Europe has kind of faded a little bit of those gains at the open, whereas to your point earlier, the NASDAQ has only increased about 2%. We should flag to our audience that later this evening, you do not want to miss an exclusive interview with the BOE Governor, Andrew Bailey. That on LIVE Go on the Bloomberg Terminal. That does it for the opening trade. Pulse is up next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
President Trump's tariff strategy is thrown into turmoil as the court blocks many of the import taxes he's threatened and imposed on other countries. While stocks rallied, the dollar gains as the ruling easing concerns about the U.S. economic outlook. Plus, chip giant NVIDIA delivers an upbeat sales forecast, but the chief executive tells Bloomberg the competition from China is now quite formidable. Now, first thing is first, there are quite a lot of market movements, so let's go cross-asset as we try and assess, of course, day 2, day 3, and day 4 of what the blocking from this U.S. court means for some of the Trump policies on import tariffs. That has led to widespread gains in risk assets, including future contracts for the S&P 500. You can see 1.7% higher, but also NASDAQ, European stocks, Asian stocks, and the dollar also gaining on the back of it. Brent crude 66.06. Now, we'll talk, of course, about OPEC Plus in just a second, but let's also just quickly go through the European markets map. Now, depending on what country was hit the most in terms of tariffs, you're going to see a bit more of a boost. The CAC 40, again, very rich towards, for example, luxury stocks. They were going to be hit quite hard for the tariffs, and so for the moment gaining 1%, the DAX 0.7% higher. Now, NVIDIA soothing investor fears about a China slowdown by delivering a solid sales forecast. The chief executive saying the AI computing market is still poised for exponential growth, and you can see pre-market it's quite gaining 5.6% higher. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Trump administration has been given 10 days to lift almost all of its global tariffs after a U.S. trade court deemed them illegal. Now, 3 judges ruled unanimously that Donald Trump had misused emergency laws just to justify the levies. Now, the Justice Department has already filed a notice of appeal. U.S. futures, already buoyed by these solid earnings from NVIDIA overnight, have soared on the ruling. So let's do a lot to digest this morning's news. Joining us us now, Bloomberg's senior editor, Bill Ferries in Singapore. With me in London, Matt Bloxham, senior analyst at Bloomberg Intelligence. And then to put it all together from a market perspective, we're lucky to have Virginie Maisonneuve, Global Chief Investment Officer, Equity at Allianz Global Investors. So thank you all for being here. Let's start with NVIDIA easing concerns about a slowdown in China as it delivered an upbeat sales forecast for the second quarter. Now, the chief executive, Jensen Huang, told Bloomberg that the AI computing market is poised for exponential growth.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Okay, so I want to get back to NVIDIA in a second, but maybe let's just start off with this huge news about the tariffs and the courts. Bill is joining us now. Bill, when you look at this, first of all, for me, it came as a surprise. I didn't know that there was actually a trade court that could do it. I'm not sure how long this lasts, whether it goes to the Supreme Court. Like, what do we actually know about this ruling?
Well, I don't know that we can answer all of those questions, but the trade court is there to deal with these kinds of specialized questions that come before the legal system. So in this case, the court has ruled that these tariffs that really were linked by the president to national security threats like the trafficking in fentanyl, to what he's to the U.S. trade deficit. These things that he used to declare national security threats, they have been ruled invalid. The court basically said trade deficits and fentanyl may be a problem, but they're not a problem you can fix by declaring a national emergency and setting these across-the-board tariffs. So we're talking about that 10% floor of tariffs that are all under negotiation right now. That has been ruled illegal, and anything related to fentanyl against China, Mexico, and Canada, that is off the books. There still are some tariffs in place, a lot of the ones that date back to the 2018 decision by Trump to impose some tariffs. But it is potentially a big body blow for the Trump administration. We'll have to see how this appeal works out. It could go all the way up to the Supreme Court. But if the courts rule that Trump can't use this mechanism to impose tariffs abroad, he's probably going to look for other ways to do so, other paths of legislation. We know he doesn't take defeats lightly, so I think he's going to go forward. What it really means for investors, for consumers in the U.S., for foreign countries, is that there's going to be a lot of volatile days ahead as this works its way through the court system.
But Bill, again, this is basically a legal point, right? It's not a value judgment on whether the tariffs, make sense for the U.S. So how likely that this, court ruling gets overturned? Is it a question of timeline that we don't know, or is it a question that actually, they just have to find a new legal argument?
Well, I don't think this vehicle is going to, this idea that fentanyl trafficking or the trade deficits are a national security threat, I don't think that's going to fly. That's what the courts, the appeals court, and then the Supreme Court will likely have to decide. But what I think the broader point is Donald Trump loves tariffs. He said it's a beautiful word. It's his favorite word. He's going to try to find a way to impose tariffs, whether it's through a national emergency declaration or some other piece of legislation. But it just adds a lot of fuel to the uncertainty over U.S. trade policy in the weeks and months ahead.
Yeah, we also know that, of course, Elon Musk has left Donald Trump as an advisor. We'll get to that in a second. But Virginie, before we get to NVIDIA, again, if you try and make sense of all of this, his trade strategy for the president is basically upended. Again, we don't know what the ruling means. It could eliminate some tariffs from China, Canada, and Mexico. Like, what's the market going to price in, given all of this uncertainty?
So on one hand, you have some guardrails that are popping up, which is very good. On the other end, you know that he will not let go. And my understanding, and I'm not a lawyer, is that there's several other rules that he can use. Article 122 that gives him the option to contest that, go up to 15%, tariffs for 150 days. Then that would need, that ends, that we need to go to Congress. There's another area, Article 338, which I believe gives him, for unfair practices against the U.S., the ability to go up to 50% tariffs. I think we have to expect that he's going to try to do this. But what is really important here is this grassroots movement that we've been waiting for a while, in terms of putting a little bit more rationality around those practices. So on the other end, it's more uncertainty. And the markets will take that into account. We will have short-term reactions, as you've said. Countries who were more targeted will have more of a rebound. But I think ultimately we have to step back and observe and let the system work it out, right?
I mean, I feel like for the last 4 months we've been talking about nothing else than tech and tariffs, right? And it's all in one. And Matt, there was a lot riding on those NVIDIA earnings, and actually they came through.
Yeah, they did. Yeah, I think sigh of relief for investors. With the print and the upbeat commentary from the CEO. We heard on that short kind of clip earlier that he talked about demand for inferencing. So essentially more companies and more people using AI technology more and more every day. And that's only going to grow. And it shows you that despite the concerns about economic headwinds from the trades, that this is a structural growth story still. And that companies, even if they're having to cut their overall tech budgets, what they're spending is increasingly going on AI, and I think that's going to continue.
There's also, of course, this U.S. chip curbs on China.
Yeah.
Does this ease some of the concern about some of the tensions and NVIDIA's access to that market?
I'm not sure if it eases concern, but at least it's kind of more out in the open now. I think the interesting thing about that update was they spoke about an 8 billion headwind in Q2 from not being able to sell chips into China. The market was looking for about 5 billion. And so despite that bigger headwind, the guide for revenue in Q2 of about 45 billion was in line with market estimates. So essentially there was an implicit beat there on the underlying business. I think the reality is China is closed for the foreseeable future to NVIDIA, probably could be forever. And Huawei is making great strides. I think the challenge for NVIDIA is remaining the number one player outside of China, because clearly Huawei is going to be looking to grow its international presence.
Virginie, when you look at tech, how much is tech and, for example, NVIDIA earnings, how much is that supporting markets?
Well, it's very important. There's a short term, the long term. The concept of digital Darwinism is at full play here. Okay, it's particularly if you take a context of higher cost via tariffs, you need to invest even more in AI to try to lower your costs. Right, so the trend is intact. What's really interesting to me is how with the Middle East, what's really interesting to me is how with the Middle East now we have even more capex coming up, right? So we were at 300 billion, maybe it's 400 billion.
Exactly.
It's a big number. And if you look at the U.S. market, we know there's been a sort of reallocation away from the U.S. market. But if you look at free cash flow, if you look at market cap, the sensitivity to AI is very large for the U.S. and that will continue. So I think to me it's all about the long-term trend has been very clear for years. But it's all about your price point, where you put the stocks in your portfolio, what valuation, and you take advantage of moments of panics, right? But I'm very encouraged by the NVIDIA results.
Yeah, and coming back on what you said about the Middle East, Jensen Huang mentioned that he's going to do a tour of Europe in the coming weeks, and so that whole sovereign AI theme has still got to play out. So we've probably got some more big ticket contracts coming in the next couple of weeks from NVIDIA.
Matt, what do you make, and then I want to go back to actually Elon Musk, but what do you make of, Jensen Huang's comments on, Chinese rivals? So he was saying that Huawei and DeepSeek are now formidable competitors.
Yeah, exactly. I think this has been the kind of debate for a few months now, is how far behind is China in the AI race? And I think the reality is they're not behind at all. Maybe they're kind of almost on parity with NVIDIA's technology. And Jensen mentioned yesterday that Huawei's chip technology is equivalent to the H200, which is the predecessor to Blackwell, so almost at the kind of cutting edge, and it won't take them long to kind of fully catch up. So that almost these constraints that China operates under have stimulated kind of innovation, and that's kind of where DeepSeek came from too. So these are very serious threats, and I say clearly America is never going to buy Chinese technology. Clearly they're going to continue to influence their partners in Europe not to buy Chinese technology. You'll see the Middle East, Africa, Asia ex-China are the battlegrounds where that fight will play out. We've seen it before in mobile technology, and Huawei has a big share of the global market, and mainly from those territories that are neutral to China and the US.
Bill, what do we know about U.S.-China right now? So, there's a bunch of things on education. We know that it's going to be also much more difficult for any Chinese students to actually come to the U.S. for education. But do we know a little bit more about what the Trump administration wants to do? There was a bit of a reach out.
Yeah, there was. And I mean, it was only a few weeks ago that Scott Bessent and his Chinese counterpart were in Geneva trying to, lower the tariff rate. They got that knocked down quite a bit. And there were a lot of expectations that that would be the start of at least a more productive relationship. The latest news about canceling interviews for foreign students who want to work in the U.S. and really reeling in, canceling some of those visas that were going to Chinese students looks like a step backwards. We're expecting the defense minister of China and the defense secretary of the United States to be meeting in Singapore this weekend. The Chinese minister is not coming, so that's not happening. There are, it almost seems like for every 2 steps forward, there's been 2.5 steps backward. I think we'll have to see how this plays out on the tariff front to see if that really affects the relationship. But it's a chaotic, volatile relationship, along with a lot of other aspects of U.S. policy at this point, and I think that's going to be the case for quite a while.
Volatile relationship, of course, I think of Elon Musk. So he said he's no longer a formal advisor to Donald Trump. I mean, this raises a lot of questions of what happens to Department of Government Efficiency, DOGE, and those efforts, Bill.
Yeah, I mean, there was always this weird balance about whether he was officially the head, but he clearly was the head of DOGE. Stepping away, it's clear that that effort has not made nearly as many cuts into federal spending as was promised at first. We heard about numbers like $1 trillion at one point. I think DOGE has scaled that back to $150 billion, and there's some real big asterisks next to most of those claims. Donald Trump is facing challenges on a lot of fronts, not just this tariff decision, but also the firing of government workers, the end of birthright citizenship. He is starting to be on the defensive much more than he was in the first couple months of his administration. And these issues, these challenges seem to be cropping up with increasing frequency as we go into his presidency.
And I guess, Virginie, I mean, if you tie it all together and you have wonderful, perspective, basically saying that, that because of this shifting world order, there's going to be imbalances and it's going to be tricky, actually, to get to certainly where the Trump administration wants to be. Yeah. How does this play out on the markets in terms of inflation, growth, but everything in between?
Yeah, so I think we're moving really from an efficiency-driven world, post-Second World War, managed by trust, also relationship, to this resilience-driven world, security, digital Darwinism, technology becomes really national security. So I think this world is being redesigned, probably being accelerated by what Trump wants to do at the tariff level, creating more regionalization. So, it's fragmentation in the global village unfolding. We will see some of that. Of course, probably the end picture on tariffs will not be what was discussed in the past few months, but we have to be able to live through the markets with this. So it's really granular work at the bottom up, who does what, who's part of the global supply chain, at what level, and constantly reassessing the earnings, so also currency's impact. Because as we know, in a shifting world with tariffs, one of the compensating mechanisms is currencies. We've seen that in the Trump.1 tariffs. But of course, part of it is also price pressure, putting on prices, inflation topic, and margin reductions. People will either pass on, take the cost, or the currency will help absorb it. Those 3 pillars are very important to understand earnings growth over the next few years. Yeah.
The markets, and especially the bond market, worries about fiscal spending 1 day, 2 days, and they no longer worry about it. Elon Musk was in an interview actually very abrupt with Donald Trump about the big and beautiful bill. Do you worry that there's going to be not enough bond demand, that a U.S. Treasury action goes badly? Is this the one to break it all?
Well, what we know is the 5% threshold is very important for the markets. It's important in terms of long-term finance. financing, it's important for attractiveness. And if, with the third downgrade of the debt, if there's a concern or if pension plan can get similar returns, and we've seen that other countries also have bond yield, long-term bond yields at 5 or plus, right? Maybe suddenly there's more of a choice. Now, for local pension plans, which are very large, right, it probably won't change much. But for foreign countries putting money in, and if you think of Japan, that's a very, very interesting proposition. With the yields coming up, inflation coming up, historically Japan has taken U.S. returns, invest in America, keep your dollar, invest. That may change. And I think there is a genuine structural question around the dominance of the dollar. And I'm not saying that the dollar becomes irrelevant. That's not what I'm saying. But the dollar, along with other currencies, may become, again, in the shifting world, more balanced. So all of this put together creates a world where deficits and, of course, dollar currency deficits are very important. And yes, so unsustainable deficits are very important to watch. Where are the resources coming from?
Virginie, thank you so much. And thank you also to Bill Ferries and Matt Bloxham, looking at, of course, tariffs, looking at NVIDIA and putting it all together on the markets. Virginie Maisonneuve, who stays with us. Coming up, plenty more on Trump, tariffs, and so-called taco trade. That's next, and this is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation.
Well, President Trump, they're responding to suggestions that Wall Street believe he's unwilling to follow through on extreme tariff threats. Still with us, Virginie Maisonneuve from Allianz Global Investors, and also joined by Brendan Murray, our global trade czar. It's quite a crown that Brendan wears. Brendan, I mean, we call it basically the taco trade because it's the idea that, you know, Trump always chickens out, that he talks tough, but then won't go through, you know, some of the big tariffs. I mean, is that the sense you're getting from the Trump administration?
Yeah, exactly. We've seen it. It's become a pattern now. We saw the big tariffs on China, the 145%. The markets didn't like it. He rolled those back. Did a 90-day extension with China. We saw it in a much shorter time span with the EU. He threatened the 50%. by Sunday, it was another reprieve for the EU after markets had expressed their disapproval. So, yeah, it seems that the market has figured this out, and that the president, as he just said, this is my negotiating strategy. You come in with a really high tariff, and then you wind up with something lower, and you declare victory. Everybody's figured this out by now, and that matters because the countries on the other side of the negotiating table, not just markets have figured it out, they have figured this out too. And the waiting game is the game that a lot of them are playing now, because the economic pain, long past the market's reaction, starts to settle in on a much slower pace. So that's what we're seeing. The countries kind of foot dragging and drawing these talks out. And of course, we now have this court ruling that's gonna create a whole new cloud of uncertainty.
Virginia, I mean, this is uncertainty in the next couple of weeks, because we actually don't know how Trump reacts to this ruling on the fact that some of his tariffs are deemed illegal. I mean, is there a danger? You say basically there's a danger that he goes after sectors.
Yes, I think if, in fact, we know he's not going to stop here, right? He's going to try to appeal. He's going to try to do something. And the court ruling is talking about how reciprocal tariffs in this state of emergency powers, if you want, is illegal. But the sector tariffs that he's imposed on steel, etc., was not named. Yeah. So I think he'll probably try to go immediately maybe towards pharma and autos and other sector to try to compensate, because it's a question of pride. And I think what was really interesting in what you said, Brian, is that there's a time clock. In the US, companies are quite paralyzed. I mean, except if you're investing in AI, you got a long-term program. But the M&A, people are all expecting. In my view, there's probably a couple of months during which, if we continue and past that, the chances of a recession are much higher. And of course, he doesn't want that. So he's trying a lot of different things, but the strategy creates a lot of havoc. Yeah. And certainly may not be an optimal diplomatic strategy. It might be a good deal strategy, but not a diplomatic strategy.
It certainly keeps everyone on their toes. Let's also talk a little bit more about Elon Musk's departure from Washington, because I think that's quite significant as well. It comes as his sprawling business empire stands in flux on multiple fronts. Well, Charlie Wells is here to talk us through the challenges ahead. So, Charlie, looking from Trump's inauguration to now, what state are Musk's businesses in?
Francine, so this is a situation where a share price really tells a story. And if we look at that Tesla share price over the past year, you can see that going into Trump's inauguration, there was so much optimism around that vehicle company about the proximity that Musk had to Trump, but also the potential of maybe Tesla to broaden out sales, maybe a sort of magnification there. You had a lot of optimism about X and also about SpaceX going into this year. But when you get to this point in the year, you've seen that narrative change quite significantly. You saw a significant decline in Tesla on the back of slumping Tesla sales across the board, but also here in Europe with BYD surpassing Tesla for the first time ever. And a number of business troubles across those business lines. SpaceX, of course, having trouble with that launch just yesterday, and an outage at X over the weekend. So a business empire that finds itself facing a number of troubles.
So where does Musk go from here, Charlie?
Francine, I think we're going to see a number of changes on the messaging from Musk as he leaves D.C. We've already seen him talk a lot about the nuts and bolts, going back to some of his sort of familiar antics. He pushed a social media message out about sleeping on factory floors, on server room floors, so really trying to demonstrate that he's focusing on these businesses. He's talked about specific goals about X money, trying to make X that sort of super everything app, about goals for SpaceX, and also needing to focus on Tesla. So these are the sort of messaging that we should expect in the days and weeks ahead.
Charlie, thank you so much. Charlie Wells there with the very latest, of course, on Tesla and some of the things that Musk was doing. Now, thank you as well to Brendan Murray and Virginie Maisonneuve from Allianz Global Investors. Coming up, we talk a little bit more about this widening and declining dollar and the wider economic outlook with Jim O'Neill, the former chairman of Goldman Sachs Asset Management. We also talk about dollar dynamics. And, of course, the big story today is what we heard from Donald Trump, Trump's trade strategy really upended by this court that that's blocking some of the global tariffs. Now, the ruling could eliminate new tariffs on imports from China, Canada, Mexico, and other countries, which could improve prospects for the world's major economies, reduce uncertainty caused by trade wars, but it seems that the uncertainty for the next couple of weeks is here to stay. This is Bloomberg.
In case you missed it, on Bloomberg Open Interest, how much would it cost to bring production here, Rebecca? I mean, what kind of upcharge would you be looking at?
There is no handbag infrastructure in America anymore besides a couple of small factories in New York City. So not only would we have to build a factory that could make the amount of units we're trying to make, but we'd have to bring back hardware manufacturing, bring back tanning and leather. I mean, these are all things that are purchased overseas and assembled. You know, if you want this to really work, give us grants to build factories, give us several years of tariff breaks in order to make these things happen, and then we'd love to make in America. It just right now, if I were to switch everything to America, my price would double, and my consumer's not here for that. As small businesses doing under $50 million, you know, keep us alive. We are employing millions of people collectively and affecting livelihoods across the U.S.
Don't miss Open Interest live weekdays.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump's tariff strategy is thrown into turmoil as a court blocks many of the import taxes he's threatened and imposed on other countries. Stocks rally, the dollar gains as the ruling easing concerns about the U.S. economic outlook. Plus, the chip giant NVIDIA jumps pre-market on an upbeat sales forecast. The chief executive tells Bloomberg the competition from China is now quite formidable. Now, Beijing says it has lodged complaints with the U.S. after the Trump administration says it would begin revoking visas of Chinese students. Now, the move announced earlier by the Secretary of State, Marco Rubio, includes revoking visas of those with connections to the Chinese government or studying in critical fields. Bloomberg's Jill Dices now joins us from Hong Kong. Jill, what could actually be the potential impact of the visa ban?
Yeah, I mean, I think, Francine, this is pretty significant here, right? I mean, you've got Rubio saying that they want to review these visas for connections to the Chinese Communist Party. I mean, realistically, you know, China's a communist country. It's a single-party state. There's 100 million members of the Chinese Communist Party. I mean, I think that kind of rationale is fairly vague and could conceivably be used to justify revoking student visas for any number of students. And I think that when you're looking at the number of Chinese students that the U.S. takes in, I mean, it's really second only to India in terms of countries that do send students to the United States for study in that fashion. So you are looking at something pretty significant here, depending on how exactly the U.S. Implements this. I mean, we know that more broadly, it seems that the Trump administration is taking a closer look at student visas worldwide, all of this being part of national security concerns, particularly when it comes to China. But I think from, sort of that practical level, this could be pretty significant. And then I think it also obviously does have some implications for the broader U.S.-China relationship, really kind of once again, sort of a ratcheting up of tensions there.
So, Jill, how much will this rock the relationship between Washington and Beijing?
So at this point, I think, again, it really kind of speaks to that idea of escalating tensions. In terms of, whether China's in position for a tit-for-tat move, I'm not sure what we may see there. I think, really worth noting that there are far less American students who study abroad in China than there are Chinese ones that study abroad in the United States. So maybe you're not looking at a one-to-one tit-for-tat move there. But I think when you take this in context of the entirety of the rest of the relationship, a lot of restrictions back and forth on each other, covering everything from advanced technologies to rare earths to simply just, what's happening with tariffs right now. I mean, obviously, we have a bit of this temporary reprieve, against each other on the big escalation of tariffs we just saw just a few weeks ago. But, that does have an end date that is due to expire at some point because it was supposed to be setting the pathway for negotiations for some sort of a broader tariff deal. I think, several, questions there about whether something like this move on the student visas ultimately does impact other elements of the relationship, including some of those trade negotiations that are happening.
Jill, thank you so much. Jill Deesis there in Hong Kong with the very latest, of course, on U.S.-China. Now, a gauge of the dollar has climbed to its highest in a week. That's as investors react to news that the vast majority of President Trump's global tariffs have been deemed illegal by the U.S. Trade Court. Now, it follows a recent retreat from the dollar in the so-called Sell America trade as Trump's policies rattle investors. Now, to talk more about this, we're joined by Jim O'Neill, former Goldman Sachs Asset Management chairman, former UK government minister, and current member of the House of Lords. So, Lord O'Neill, thank you so much for joining us. You wrote a couple of opinion pieces in the last year saying, look, it's not especially healthy for the world to be so dependent on the dollar. Will the world be fundamentally less dependent on the dollar given the last 4 months?
Wow, what a weird day to have to answer questions like this. I mean, who knows what's going to happen in the next week on this stuff. Yeah, I think one needs a sort of three-dimensional version of game theory to kind of just follow through what now might happen. But when I sort of stand back from it, I think that the core thrust of where the Trump administration is trying to go, and as an aside, I suspect the more sober, rational people in it, like Scott Bessent, probably won't be overly displeased with this ruling, given that they're essentially against tariffs. I think you've got to figure out what is the probability that they just back off on aggressive trade measures as a concept, or they seek alternatives that are either going to get through the courts, but most importantly, as it relates to the very question you asked me about the dollar, do they revert to a more conventional, let's call it, version of the 1980s and the Plaza Accord? And many of your viewers or listeners are probably not around in those days, but the Plaza Accord to deliberately weaken the dollar was done to avoid Congress imposing protectionist tariffs against the rest of the world, particularly Japan in those days. So I don't think this is the end of many of those questions. And the other thing that I've written about in many of those pieces, including the one recently, is it's not just the tariff issue that threatens aspects of the importance of the dollar and the rest of the world's dependence on the US consumer, but the whole issue of how it's taking on other bastions of, the not only establishment America, but also the things that have probably made the US so exceptional, such as Harvard University. And those things don't. I've just listened to the back end of your conversation about the visa issue with China. You know, if the US is truly trying to stop foreign students from all over the world of going to US universities, you know, I would argue that that is something also that is indirectly pretty bad for the long-term outlook. It's not relevant to tomorrow, but it's pretty bad for US productivity and pretty bad, therefore, to the fair value of the dollar over the longer term. On the issue of what the rest of the world... Yeah, sorry, go on, Fran.
No, if you look at global trade, right, overall, I mean, if we're going through a fundamental redesign of global trade, and I don't know whether you think that's exactly what the Trump administration wants and whether they'll succeed, but given the interdependency of trade, if they want to redesign it, I mean, it's going to be chaos over the next 5-6 months, no matter what happens.
I guess what I was trying to say, a more rational approach, and this might be the sensible thing for other countries to still do, is to try and just, through verbal and coercion of other means non-tariff, to persuade countries that really matter, like the EU, like China, to pursue more expansive domestic demand policies that would suck in more imports from the rest of the world, including the US, and or voluntarily choose to import some specific things more from the United States. And I don't think that's a crazy thing for the US to encourage. Throughout the whole of my 4 decades of looking at all this stuff, you know, it's like a reoccurring theme every other decade that the US has had enough of being the main consumer for the rest of the world. And I think they have got a point on that. I've not understood for the whole life of the existence of the Eurozone why its biggest member, Germany, never has any domestic demand growth. And of course, we're seeing a change on that. So I think that will stick. Whether the EU will actually continue to think, well, now we can get away with what we didn't really want to do, or in fact still think, well, you know what, we should import more stuff from the US just to keep not only the people around this president and future presidents more content, so we don't have to go through it all again, you know, is amongst the intrigue that we'll now face. But the idea, it's very interesting to see the markets reacting, I suppose not surprising the way they've done this morning, but the idea that this means many of the issues about the dollar the past 3-4 months are now over, I think is very questionable.
You coined the term brick over 2 decades ago. Do we need to look at the world radically different now? So it's not, you know, developing countries, developed countries. It's everything's much more in flux. If you had to redefine the global world order, like what would it actually look like, Jim?
Wow, I mean, we could spend the whole of the rest of the week having that discussion.
It's TV, we have 20 seconds.
Yeah. You know, I think what we really need in the near term, it seems like impossible, but we need a resurrection of the G20, which is, so far this millennium, the only thing that has brought the BRICS countries and the G7 and other big developing and developed countries together in one forum. And after the financial crisis, it did a pretty good job for 2 or 3 years, despite all the differences of coordinating the world in a healthier way. And we desperately need that again. What we probably do need over time is a restructuring and a reordering of all these post-Second World War institutions that aren't doing the job they were supposed to do. And again, despite me finding the way this administration is trying to deal with them pretty horrific, they do have a point on some of these issues.
Where do you see, Jim, the biggest value in markets? So again, we're you know, trying to figure out the immediacy of the court ruling today. But if the dollar, you know, weakens, do we see China as a big winner? Can Europe take that role? So
all the way back since, this is a dangerous question because I'm feeling a little bit cocky. You know, I know more than many that it's pretty easy to get these things wrong quite often. But I came to, as soon as I saw the Bundesbank in November saying that the German government should abandon its debt ceiling rule, I thought, this is a big moment. And maybe we're on the verge of a multi-year performance of European stocks outperforming the States. And that's kind of what's happened, of course, so far this year. And I would stick to that. I think, at a minimum, this chaos from Trump has woken up the EU to deal with things it should have dealt with for its own benefit many, many, many years ago, if not decades. And I think some of these things are not only here to stay, but some of them, such as genuine cross-border services sector reform in Europe, are likely to accelerate. And I think the markets have cottoned onto that, and they're right to. So I think that the general relative performance of equity markets that we've seen so far in this very volatile year is actually going to be a theme for a few years. And so that'll be probably my strongest hunch. Yeah. On the dollar itself, you know, the markets seem to be so quick to price in everything. I can see why the dollar would stabilise and recover a bit from this if this is the new status quo and the tariffs won't be so big. However, I can't see anything other than over the year a further weakening of the dollar, because the dollar is significantly overvalued, and I think the equity flows that have driven it are not going to be there compared to the ones that are likely to be attracted to other markets.
No. Do you think the market is too pessimistic? Jim, we were talking before about the fact, you know, there's the taco trade, which I did not coin that, but it's an acronym for, you know, Trump always chickens out because he talks tough, but then it doesn't want to follow through on the tariffs to the extent that to which he says he would. So is the market just generally optimistic whilst ignoring all of the deficit concerns in the U.S.?
Well, we haven't even touched on that yet. I mean, you know, when I look at some of the aspects of this tax bill that's going through Congress, which is probably going to pass, on top of where the US budget deficit is in the first place, I mean, quite how that is going to end positively, I have no idea. And that means that the US fiscal position is probably on some medium to long-term collision course with the bond market. And so, and you know, markets are pretty good to think about big things that are coming. So at some point, which is very unpredictably when, you know, there's going to be a whole set of financial trauma issues related to that, in my view. In the day, you know, some people think that this is a modern version of Reaganomics and is essentially going to help really boost US trend growth and therefore be really good for the dollar. I find that very hard to see, because the nature of this fiscal deficit has so much in it because of just an inability of the US to reduce spending on things that really matter, such as the colossal bill they have on health, just one example. I think it's not particularly good for US growth, and so I think at some point that is going to result in the same scale of intense focus that we've seen on the tariff issue for the past few months, even if the tariff issue goes away.
Okay, so interesting. Jim, we haven't even talked about football, so we'll have to get you back on. Jim O'Neill, former chair. I don't know if you want to talk about football or not.
That's a topic I don't want to talk about for the foreseeable future.
I know, that's why we'll get you back on. The former chairman of Goldman Sachs Asset Management and a member of the UK House of Lords. Now, President Trump says he's holding off on new sanctions against Russia in order to preserve the chance for a deal with Vladimir Putin to end the war in Ukraine. Earlier, Germany's top diplomat said he's optimistic that Washington will issue new sanctions against Moscow if Putin continues to dodge a peace agreement. Now, for more, we're joined by Greg Sullivan, a Russia economy and government editor. So, Greg, thank you for joining us. How serious is Trump's threat to impose new sanctions on Russia?
Well, right now we're hearing from the U.S. president that he wants to wait on new sanctions to give the peace process a chance to come to a final deal between him and Putin. We have seen that he has been making new and more frequent threats to impose new sanctions on Russia, especially in the wake of some of the heaviest bombardments from missiles and drones that Russia has sent against Ukraine since the start of the war. Clearly, there is a level of rising frustration on the part of the president, but until now, he's been very reluctant to impose any kind of punitive measures, worrying that they will disrupt the peace talks or disengage his attempts at rapprochement with Moscow. Clearly, he's favored bettering relations with the prospect of future economic cooperation with Moscow over any kind of punitive measures to try to force President Putin to the negotiating table. Now, talks so far have produced very little. They've been going very slowly. It appears that President Putin does not want to end his war. He's seeking more military gain on the battlefield. So if that continues, that could frustrate frustrate President Trump and potentially change his tune. He is under an awful lot of pressure from senators, some in his own party, to impose sanctions. So that is a dynamic to watch there.
Greg, President Zelensky also held talks with the German Chancellor yesterday. So what has concretely come out of that meeting?
Well, there's a few things here. One is that Germany agreed to new aid for Ukraine and will help it develop a domestic industry to manufacture its own weapons. Ukraine has been seeking the use of long-range weapons to strike inside of Russia as it seeks to degrade Moscow's ability to attack Ukraine. It wants to target airfields, missiles, weapon storage, things of that nature. So far, Germany had been reluctant, especially to supply the long-range Taurus missiles, but now we have Germany agreeing with Zelensky to help develop the Ukrainians' own industry. Now, the dynamic here is interesting because obviously U.S. support, there are key questions around whether that will continue and in what ways. We've seen support waning from the U.S., so this will help Ukraine turn to a more self-reliant stance as it continues to fight its war against Russia.
Greg, thank you so much. Greg Sullivan there with the very latest on Ukraine and Russia. Now, coming up, we'll discuss the outlook for oil as OPEC Plus ratifies its quota plans for this year and for 2026. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Now, the chief executive of Aramco says he's positive about the future despite the impact of Donald Trump's trade war. Well, Amin Nasser has been speaking exclusively to Giovanna Borsetti for Wall Street Week.
The fundamentals still strong. If you look at the first quarter, the growth compared to the first quarter of 2024 is 1.7 million barrels per day, which is a strong growth that we have seen. The tariffs had some impact in global economy and sentiment, but still the fundamentals are strong, and we think that will continue for the foreseeable future.
Well, you can see more of our interview with Amin Nasser in Wall Street Week special on Aramco, airing next month on Bloomberg TV. Now, OPEC Plus has ratified oil production quotas for this year and next, ahead of their meeting at the weekend, where they're expected to decide whether to boost output again in July. Now, we're now joined by Marita Sen, founder and director of research at Energy Aspects. And Marita, as always, thanks so much for joining us. Do you think OPEC Plus will actually add another 400,000 at Saturday's meeting?
Yeah, I mean, this is the 8 voluntary countries, or 8 countries that have done the voluntary cuts, and it is likely that they do add another kind of 3x increase in production. Some of the core issues that we've been dealing with, which is kind of under compliance when it comes to some countries like Kazakhstan, that remains. That hasn't really been resolved. And also, if you look at fundamentals in the right here, right now, they are strong. Inventories are very low. If you look at the curve, remains in backwardation. Product markets are very strong. So it is a good time for OPEC to add barrels to the market. So I don't see why they wouldn't actually continue with the current policy.
What do you make, of course, of Kazakhstan's public refusal to cut? What does that mean?
It's a tricky situation given they have all these foreign companies, and a lot of these foreign companies are U.S. companies. And we've seen certain kind of U.S. companies and their CEOs over the last year being accused of colluding with OPEC. So I think there will be a lot of cautiousness, particularly for these U.S. companies to even do anything that could seem as that they are doing something with regards to kind of siding with OPEC. Yet Kazakhstan remains a member of OPEC plus, and therefore it has obligations. And I think this is an ongoing conversation that's happening between countries, between Kazakhstan, Russia, and I'm sure the other members. And yeah, I mean, one way or the other, the compensation, forget the compensation cuts, but just the compliance has to improve. Maybe you start to get more maintenance in the coming months. That's what historically they've done to meet compliance. And I think maybe over the kind of autumn months, you see a bigger than usual maintenance if they are to catch up.
Do you think Kazakhstan will leave OPEC plus?
It's a tricky question. We do get asked that all the time. And, again, we have seen other countries kind of leave in the past. That's not our base case. I think, again, this is a period of you've had some new projects, and that's why they are struggling with compliance. I think they gain more to be a part of the group than away from the group. And I think, again, like I said, it's going to take some time. But, I mean, ultimately, there will have to be a solution to this kind of compliance problem.
Rita, there's a lot of uncertainty, right? I mean, oil today climbing on this risk-on mood as, this trade court has blocked Trump's tariffs. We don't know what happens next week. We don't know whether he goes after sectors instead of countries which haven't been mentioned in the court ruling. But is the market overall, you think, headed for a recovery, or is it headed for a deeper slump?
Yeah, I mean, it's a great question because, again, every day you wake up, you just don't know which way the wind is blowing, right? And I mean, the court ruling, from our understanding, takes away all the Liberation Day tariffs. However, it does not take away the sectoral tariffs. So tariffs on steel, aluminium, and automobiles are still in place. I would say our view is that given how central tariffs are to Trump administration's fiscal agenda, the administration is going to find several other legislations in order to reimpose most of these tariffs over the next few weeks and months. And I think the problem is because, again, we know White House has already come out and said that they're going to appeal this, that from a company point of view, you just don't have the certainty, right? So you're not going to go ahead and make a decision to import right now. What if the tariffs do get imposed and you have to pay retroactively? So it doesn't change anything on global oil demand just yet. If the ruling holds up, then of course it's a positive for 25 GDP, 26 GDP, and for oil demand. But right now, it's too soon to make any changes because we know that tariffs are so crucial for this administration.
Rita, and I know current stocks, are low, but you believe that stocks in oil will actually build up in the fourth quarter. Is there anything that makes you doubt that?
Yeah, I mean, I think this is the dichotomy in this market, right? It's fascinating because I think all our balances are calling for Q4 builds, in part because demand growth slows down with the impact of the tariffs. We've got more OPEC plus barrels as well in the market. And that's in everybody's balances, our balances and everybody's balances. But the problem right now is that the right here, right now is so tight. And I think that's why your question is fair, that do you actually see something underperform, whether it be supplies? I mean, US shale, you are already starting to see some signs of slowing down. We are seeing more SPR buying from China again, so that's more crude demand that's coming through. Those factors can actually mean that some of those builds in Q4 are less than we are expecting. we still are confident we're going to get a build, but if inventories are so low to start with, the extent of the build will matter a lot, right? If it's less, then you don't have to have a market that's weak. You can still have a market that is stronger than what people are expecting today.
Amrita, thanks so much, as always. Amrita Sendler, founder and director of research at Energy Aspects. Now, coming up in a few minutes, an interview with the PIMCO president, Christian Stracke, on the state of credit. You don't want to miss that. And then later this evening, also, our exclusive conversation with the Bank of England Governor, Andrew Bailey. Now, you can check that out on LiveGo on the Bloomberg terminal. A lot of the focus today will be on markets, on futures, and exactly what we learned and what we'll learn today on this Trump strategy. It certainly be upended after a court has blocked global tariffs. The ruling could eliminate new tariffs on imports from China, Canada, Mexico, and other countries. Up next, Bloomberg Brief, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Are you worried about your orders because of what's going on in Russia and Ukraine? Is that something you worry about in terms of the impact of Russia, Ukraine on your investment appetite for things like that?
I'm not worried about Russia invading Norway anytime soon. We are a member of NATO. We do border to Russia, but now, since Finland and Sweden joined NATO, we feel stronger than before.
So today, what would you say your biggest investment concerns are? You're running $1.7 trillion fund. For the average person to not manage that much money, what should they be worrying about, and what are you worrying about?
No, I think you've got two things. One, you have the known unknowns, right? So, and there at the top of my list would be two things. One is inflation, because I think there is an argument in a tight labor market when you potentially decline the supply or reduce the supply of labor. In the US, you put on tariffs. These things can be inflationary, and there could be a moment where, given the high level of government debt, that the investors suddenly decide, you know what, we want a much higher coupon to lend to, to governments. And so you could see a step up in interest rates, which could be negative for financial markets. Then, of course, all the AI-related stocks, the epicenter here is Taiwan, so you need to watch that. The thing that really scares us when it happens is the unexpected,
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Tariffs blocked. A U.S. court strikes down most of President Trump's levies as illegal. The White House says it will appeal. And the AI boom continues. NVIDIA calms investor fears over a China slowdown with a solid forecast.
These AI
And our exclusive interview with PIMCO President Christian Stracke just around the corner. Now, in the meantime, we wanted to play you some sound there from both the NVIDIA CEO and President Trump, because those are the two stories dominating. We thought maybe it'd be NVIDIA to start the morning, but not so. It is this overruling of President Trump's, at least Trump 2.0, his tariffs. That has sent us off to the races. We're up 1.5% for your S&P 500 futures. NASDAQ up nearly 2%. I got to say, maybe not as big of gains as you would expect, but we are now only 4% away from all-time highs. When it comes to this bond market, interestingly, yields are still higher across the curve. You can see the long end, we closed above 5% for the first time since October 2023. Maybe if we don't get that tariff revenue, maybe you can't have as glorious as cuts. You can't have the big, beautiful bill. That seems to be weighing on investor minds this morning. I should note the dollar also finally stronger. Do we start to price out some of the policy volatility with this latest ruling? We'll get more into it, but first, let's get you some stocks to watch this morning. With that is Bloomberg's Joe Easton. Hey, Joe.
Hey, Danny. So big moves in the chip space today. We are seeing NVIDIA rising at around 5% in the pre-market. Remember, the sales beating expectations pretty much due to sales of the H2O chip. In fact, better than feared, given the restrictions we've seen on China. That was kind of the main takeaway. The Blackwell chip ramping up, of course, I can't forget that one. And we're seeing a feed through into peers. Marvel Technology, Supermicro, ARM, all of the chip stocks boosted by that single report in the pre-market today. But a stock not boosted is HP over in your computer hardware and printers. That one hit hard in the pre-market this morning. The company actually missing expectations on their earnings by around 10 cents, well below analyst expectations. So HP down at around 9% this morning. Then one for the believers, Hailey Bieber offloading her company to Elf Beauty. Now that is worth around $1 billion. I've spent the morning learning all about cosmetics. I've learned that Elf stands for eyes, lips and face. So I'm learning all the time on this one. But that stock, Elf, gaining 8%. News on that M&A deal actually taking the shine away from a weak earnings report from Elf this morning. Danny, keep an eye on that one and check out the Before the Bell opening wrap on the terminal very soon for you this morning, Danny.
We all learned something this morning, Joe. I did not know that either. Thank you very much for that. Bloomberg's Joe Easton. Now, in just a few moments, we're going to be speaking exclusively with PIMCO President Christian Strack on the state of credit. Later in the hour, we'll also be catching up with Julian Emanuel of Evercore ISI to talk about where stocks go from here after the latest court ruling and, frankly, of HSBC on NVIDIA earnings. Let's get back to our top story, though. The Trump administration has been given 10 days to lift almost all of its global tariffs after a U.S. trade court deemed them as illegal. The Justice Department has already filed a notice of appeal. For more, we're joined by Bloomberg's Brendan Murray, who leads our global trade coverage. Brendan, help us understand exactly where do we stand now with Trump's tariffs?
Yeah, so this is a pretty big setback for the Trump administration. The White House had basically based its entire economic agenda on the foundation that tariffs would bring jobs back to the U.S., would bring production back to the U.S., and the particular tariff that the president launched on April 2nd, this so-called reciprocal tariff, was the biggest, bluntest instrument he was going to use, and it worked. It got countries to come to the negotiating table. There are, by a couple of estimates, a dozen or two countries that are negotiating bilateral trade agreements with the United States right now. This court ruling throws all of that into question. Why would a country continue those negotiations if the reciprocal tariff that the administration is hanging over their heads is illegal and won't be imposed? So there's a lot of questions, way more questions than answers right now. We should get more as the day unfolds. One of the big ones is, will Trump comply with this court ruling? They, as you mentioned, they're going to appeal, but Trump has tried to stretch the use of his authority in other cases, and he's done so in this instance, apparently, according to this court. So the administration will be watching closely as to how the administration shifts now into its Plan B. It's not the only tool that's been taken away from him to conduct trade wars. There are many others. So trade wars aren't going away, but they might be on pause for the next couple weeks.
Hey, Brendan, thank you so much for that update. A lot to unpack. That is Bloomberg's Brendan Murray. I'm pleased to say that joining us now for an exclusive interview is Christian Strack, President and Global Head of Credit Research at PIMCO. Christian, what a morning. Who knew that this is what we'd be talking about to start? But we really have this year been oscillating between bearish and bullish, fears of trade, fears of fiscal deficits. Where do we stand now? Is this a bullish trade with this ruling in hand, a wave that you want to ride right now?
Yeah, thanks. It is quite a morning, and certainly quite a last few weeks. But really, there's a few moving pieces right now that are driving what's happening in markets. On the one hand, if you have tariffs getting rolled back, then that could mean less inflation than the market had been pricing in over the course of this year as a response to tariffs, which then would maybe, at the margin, help the Fed be a little more confident that it could start a rate cutting cycle. On the other hand, if all else equal, people were thinking that tariffs and a trade war would dampen economic sentiment and dampen economic growth, then if you have less in the form of tariffs, then maybe you have more economic growth, which then maybe gives the Fed more pause. So basically what you're seeing in the market is a little bit of higher rates today on balance, not much. Market being in the fixed income market pretty well behaved through all of this. And then, of course, an eye on what happened with the NVIDIA earnings and how that helps support equity prices, which in turn helps the economy more broadly. So all in all, it makes a little bit of sense that we've got rates a little bit higher here. But generally speaking, the market is digesting this news pretty well, as it has been for the last few weeks.
To that point, Christian, one of the big left tail risks for this market had been the fact that you could have a president who could put out a Truth Social post, who could, with the press of a button, implement tariffs and send markets in that volatility spiral. If we remove that tail risk with this court ruling, does it make us reconsider what had been a waning U.S. exceptionalism trade? Do U.S. assets all of a sudden look that much more attractive?
Well, I mean, it's early days, of course, in terms of the battle in the courts around tariffs. So it's hard to say that the volatility related to tariff announcements is over. But I think the market, even before today, the market has been saying that the world can digest the changes in tariffs as they stood before this court decision, and the world can even digest and handle the volatility around the Truth Social announcements. That's why you've started to see stability in fixed income markets. That's why you've started to see stability in credit and equity markets. Now, there will be more headlines and there will be more volatility on this back and forth in the courts around the tariff announcements. But I think the market has been sending a pretty positive and healthy signal that, yes, there's volatility, yes, there's uncertainty, but by and large, we can settle in around what is a base case of weaker growth, a little bit higher inflation, but neither alarmingly so.
You're painting quite a benign picture, Christian. We had heard from a lot of companies, though, that had really hit the pause button when it comes to things like hiring, when it comes to capital expenditures. For borrowers at this moment, how challenged are they? Just how disrupted is the normal business model for funding and liquidity?
Yeah, it's a great question. It's really kind of differentiated across different borrowers. If you look at large cap investment grade companies right now, they're in a good place. They had years ago termed out their debt with low fixed coupon rate debt, and they are pretty well set up for if there is economic weakness. Now, certainly what we hear from most of the large cap companies that we lend to at PIMCO, that there is a pause and a lot of fixed investment waiting to see what will happen with not just the tariffs, but also tax policy. So that pause is real, and it will dampen growth over the course of this year. But by and large, those companies can manage. Where there is more concern is lower down in the capital structure, particularly those below investment grade companies that have borrowed in floating rate liabilities, so bank loans in the bank loan market and also the private credit market, where you do have a lot of companies that pay floating rate debt, and rates are much higher than people had expected today and will be much higher than people had expected over the course of this year. And so the weight of those interest costs is pretty serious on what are already pretty levered companies in the context of an uncertain economic outlook. So you are seeing a moderate but real default cycle emerging in that part of the credit universe, that leveraged loan, bank loan space, and private credit. So far, it's pretty manageable, and so far, it's not anything that is seriously concerning for the rest of the system, but it is something that we're keeping a close eye on.
What are the risks it becomes unmanageable, that it becomes concerning for the rest of the system, Christian?
Yeah, well, you'd really need a hard recession. That's what it'll take. So in a scenario, which is PIMCO's scenario of weaker growth, low growth this year, but not a recession being the base case, then you'll see kind of a mid-single digits type of default rate in that leveraged loan space, in that private credit space. And that's difficult. It'll be worse than seen in years prior, but something that will be okay. If you had a hard recession, then that's a difficult world for a lot of those companies to manage through, where you've got the Fed still on hold or will be slower than it would otherwise be, and economic weakness. Then you could see a high single-digit default rate in that space. Now, how that then would trickle out into the rest of the economy is difficult to see. Banks are in a pretty good position. I think one factor that has given us a lot of confidence over the last 2 months has been that if you look at bank equities, bank spreads, they've been pretty well behaved through all of this volatility, which speaks for banks as a turbocharger of volatility, as a channel of weakness, are not as concerning as they might have been in prior years, because banks have done a lot to delever and banks have done a lot to recapitalize. And so given that, we're less concerned about a systemic shock to the system if we did have that worse than expected economic scenario.
One place that we have seen continued volatility, Christian, is in sovereign bond markets. It's not just happening in the US, it's happening in the UK, it's happening in Japan, but here we had 5-year yields close above 5%. There's serious concern about fiscal overhang and what that could mean for the bond market. Is there a structural rethink happening more widely in bond markets, Christian? Do you look at treasuries and say, these aren't the risk-free assets that they once were?
Well, there's a few things going on, and one is just as basic as portfolio rebalancing. A lot of investors, a lot of PIMCO's investors see that they have much more exposure to the U.S. and to dollar assets than they had expected, and part of that is just the natural creep of U.S. strength and U.S. exceptionalism that we'd seen over the last couple of years. Has left people more exposed to the U.S. And so there's a rebalancing, there's a pullback and back into more home bias currencies, away from the U.S. into the euro, into sterling, into yen, et cetera. As that happens, that involves selling of U.S. assets, and that involves selling of U.S. fixed income assets, and that's led to some of the volatility that we've seen. That'll take some time to happen. It's not particularly alarming. What is a little more concerning, though, is more what you mentioned, the fiscal exhaustion. Are there limits to fiscal deficits in the U.S. and in the developed economies, and limits to how far markets will finance those deficits? And there is certainly, that question is an overhang. And one of the open questions now will be if the market had priced in some amount of revenue coming in from tariffs to help to finance, maybe not explicitly, but implicitly to finance the tax policy changes that we're seeing coming out of the Trump administration, then if that tariff revenue goes away, does that compound issues around the deficit, around the Treasury's ability to finance itself? So that will continue to drive volatility in the coming months as markets look to see some resolution, both on the tax policy, but also on tariffs and whether they help to finance.
It's such an excellent point, Christian. We're certainly seeing some degree of that play out this morning. And you have seen some other governments, the UK and Japan, take a note of the US's book, that is pull back on long-term debt issuance. It's something you usually see in emerging markets, of buyers unwilling to buy long-dated bonds. What is the likelihood we get to a situation where you have a fiscal deficit in the U.S. that buyers, especially foreign buyers, to your point, are less likely to fund?
Well, you could say that over the last several weeks, there's been some of that already. There's been some change in portfolio allocation where foreign buyers are saying, we'd prefer to be in our home currencies. We'd prefer to be more diversified and away from the U.S. And so that will drive outcomes in markets in the U.S. It'll drive outcomes in policy as well. And so, there's real focus on this in Washington on the part of policymakers in terms of, keeping an eye on the bond market, keeping an eye on what is possible in terms of tax changes, what is possible in terms of tariffs to help to stabilize the Treasury market. By and large, though, you can look at the last couple of weeks and see that there has been some stability and some realization that this will be painful and this will be volatile. but it won't be something that gets out of control. It'll be a process over the course of this year and probably into next year of rebalancing these portfolios that will keep pressure at the long end of the curve. And for that reason, PIMCO portfolios are underweight at the long end of the curve. But it should be something that should be reasonably manageable, barring any alarming changes on tax policy or on tariffs.
Christian, I'm pleased to say that you're sticking around with us. Much more to cover. Christian Strack there of PIMCO. Let's first get you some other stories that are trending on the terminal this morning. The Trump administration is moving to restrict the sale of chip design software to China. Bloomberg sources say the Commerce Department sent letters to some of the leading providers of electronic design automation on Friday, telling them to halt shipments to Chinese customers. Shares in top makers of the tech like Cadence Design Systems and Synopsys are falling in the pre-market trade. Every Doge has its day. Elon Musk's time as a special government employee is coming to an end. The billionaire thanked President Trump for the opportunity to reduce wasteful spending in a post on his social media platform on X. His effort to reduce government spending began with an ambition to cut $2 trillion and eventually downgraded to $150 billion. The Doge website currently estimates a total savings of $175. The U.S. plans to start aggressively revoking visas for Chinese students. That, according to Secretary of State Marco Rubio. The U.S. will also enhance scrutiny of all future visa applications from China and Hong Kong. Rubio said students associated with the Chinese Communist Party or studying in critical fields would be affected. Coming up, we'll have more with PIMCO President Christian Strack on the state of the credit market. That's coming up next. You don't want to miss it on your Bloomberg Brief.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens, I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Back with us, I'm pleased to say, is Christian Strack, President and Global Head of Credit Research at PIMCO. Christian, we were talking a bit about how volatile markets have been in this moment. And in past moments of volatility in COVID, we saw funding dynamics change. That is, the banks pull back and private credit really take up this mantle. That's not really happening this time around. As you noted, the credit markets are still functioning. How do you see that mix of funding evolving this time in this volatility?
Yeah, thanks, Danny. It's a great question. You know, there's a couple things going on. One is that we are seeing good flows into credit in general. We're really into fixed income in general, given the fact that equities, having recovered as much as they have, are getting back into zone where they could be a little rich. Given that rates are quite high, we are seeing a lot of interest in high-quality fixed income. That's something that PIMCO sees and other managers are seeing. And so there is demand for liquid credit right now, and there is funding availability, particularly in the investment grade space. But you're right, there is something of a slowdown happening in corporate private credit, which had been a white-hot area of demand and of funding for the last few years. That has slowed down. It's slowed down in part because private equity itself has slowed down. If you think a lot of that corporate lending through the private credit market is there to fund private equity deals, private equity deal making has slowed down considerably, and so it's kind of a natural function of that there isn't much private credit issuance. What's interesting, though, is that there has been a significant ramp up of what's being called asset-based finance, basically private credit diversified outside of corporate lending, the traditional direct lending in private credit. So that would be non-bank lending in residential mortgages or credit cards or auto loans or aviation finance, equipment loans, things like that. That is an area that is really picking up speed in terms of the availability of finance outside of banks. So managers like PIMCO are very actively building out strategies to be able to provide financing in these areas where banks really have retreated, but where households still need access to credit. There's still a significant need for credit in residential mortgages, in credit cards, auto loans, things like that. So it's a really dynamic area where there's a transformation in the way that credit is provided into the system, and there is a lot of demand and a lot of supply there.
Just given that, Christian, is this where the next leg of growth comes from when it comes to PIMCO?
This is an area where PIMCO is actively building out, is actively finding areas where our clients are really interested in diversifying away from that more traditional private credit area or corporate private credit area. So yes, this is an area of significant growth for PIMCO. Of course, at a manager like PIMCO that's got a broad platform across public and private credit, there's a lot of growth on the public fixed income side as well. The demand for liquid fixed income with higher yields, especially given the rise in yields that we've seen this year, is significant as well. So really, if you're looking at PIMCO, there's a strong balance right now between that public and the private. But certainly out over the next few years, we do see this rise of diversified private credit, asset-based finance as one of the key drivers of growth in private credit as a whole and at PIMCO in particular.
You're talking about the spread in the private and public offerings, Christian. We are also in this moment where everybody loves to talk about the convergence of private and public assets. And that is, you get a lot of these players teaming up with the more traditional asset managers, offering things like ETFs in the case of Apollo and State Street, but more liquid-ish, let's say, products to a retail audience. PIMCO is also a firm that does span both the more private type assets and the public offerings with various ETFs and mutual funds. What do you think of that convergence? Is this an appropriate wrapper for more private credit type assets?
Well, the convergence is real, and if you look at just how the credit markets are evolving, managers like a PIMCO need to be able to provide a liquid solution to a borrower or a private credit solution to a borrower and have that option across liquid and illiquid. So that is real now, but the question, and you raise a good point, is, well then, how do investors access it? What's the right way for investors to access? There are a growing number of what are called interval funds or funds that provide less liquidity to investors for a wealth or retail audience. And those are being designed pretty thoughtfully in a way that does allow access to less liquid exposures, but conveys to the investors that you need to know that you will not have overnight access to your funds in these products. Of course, then there's really a whole question around how well are those designed, how are they structured, how are they sold, how are they communicated, et cetera. So that's a big area of development and of growth for the industry right now. But if it's done well and if it's done right, and PIMCO's got a whole suite of these products that we've been operating for a number of years now, then it can be this nice balance of access to higher returning, less liquid assets, but in a strategy that's appropriate for the investor.
Hey, Christian, this has been so fascinating. We have covered so much ground. Please come join us again. I know you're headed off to Berlin for Super Return. Hopefully I'll see you there, and safe travels on your way. Christian Strack of PIMCO, thank you so much. Now, as we head to the end of the half-hour quick check on markets, we continue to power higher for risk assets. We're up 1.5%. A little bit of strength coming from the dollar. U.S. 10-year yields up about 4 basis points, 4.52%, just thereabouts. Now, coming up, stocks are up almost 6% since President Trump imposed global tariffs. We're going to catch up with Evercore's Julian Emanuel next. This is Bloomberg.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Tariffs blocked. A U.S. court strikes down most of President Trump's levies as illegal.
Well, we got a whole bunch of engines firing right now. The demand is just off the charts. You see the popularity of all these AI services now?
And the U.S. plans to begin aggressively revoking visas for Chinese students. Beijing bashes the decision, saying it's discriminatory. A little bit of sound issues this morning, but we are back with you. And futures are higher this morning after that court ruling. The S&P 500 future session up 1.5%. That means just on the futures pricing, we are 4% away from all-time highs. With those NVIDIA earnings in the bag, NASDAQ 100 futures also outperformed this morning, up nearly 2%. For your bond market, 30-year treasuries closed above 5% for the first time since October 2023, just 2 basis points away from the 2007 highs. We had a soft treasury auction yesterday, but maybe there's also this other concern brewing that Christian Strack of PIMCO was just talking about. Does no tariffs mean no revenue, mean less tax cuts? As we think that one over, let's get some stocks to watch. Back with us is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So it is looking like a really positive session for the chip stocks today. Nvidia up 5.8% in the pre-market following that earnings report. Now, remember, we did see the company actually beat expectations on sales. Those restrictions on goods sold into China actually not having as bad of an effect as feared, and also the Blackwell chip rollout boosting that report, and we're seeing peers gaining as well. Marvell Tech, we're up almost 7% on that one. Supermicro joining the fun as well, we're up almost 5% there, and ARM Holdings gaining as well, 4%, and adding to that move in the Nasdaq that you mentioned a moment ago. Then a sector not doing so well, potentially going to be in computer hardware. HP dropping pretty hard in the pre-market. We're down 8% on that one today. Now, the company missing on their earnings in the last quarter by a full 10 cents, really underperforming where analysts were looking on that one. HP losing out this morning in terms of your movers. Then finally, Elf Beauty, a bit of a Hailey Bieber story coming into this one. She's offloading her makeup and cosmetics business for $1 billion to Elf, which I have learned today does stand for eyes, lips and face. Elf Beauty gaining around 9%. The earnings were pretty weak on that one, but everyone focused on that Hailey Bieber deal. $1 billion that sell, the M&A focus for the cosmetics business today. Elf Beauty gaining almost 9% in the pre-market this morning. Danny.
Joe, thank you very much for that wrap-up. That is Bloomberg's Joe Easton. Now, the latest tariff ruling giving stock futures a boost this morning. Take a listen to President Trump on the market volatility and, yes, the taco trade and the headline trade.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
It's called negotiation. You mean because I reduced China from 145% that I set down to 100 and then down to another number, and because I gave the European Union a 50% tax tariff, and they called up and they said, please, let's meet right now. We have an end date of July 9th. You call that chickening out?
By the way, we should absolutely give credit to the FT and Robert Armstrong for coming up with that term, so good luck to him over there. Now, S&P 500 futures, with that gain in hand, are up now more than 5.5% since the beginning of April. We're 4% away from all-time highs. Now, the policy team and Sarah Bianchi over at Evercore writing this on the latest. Markets may rally on the news, which they are, but investors should be cautious of Trump's reaction to this and the press question, that one we were just listening to, as he still has a lot of other tariff power. Let's bring in now Julian Emanuel, Senior Managing Director of Equity, Derivatives, and Quantitative Strategy at Evercore ISI. Julian, you and the team and Sarah over at Evercore nailing it as always. So how bullish do you really want to be after this?
I think you need to be sort of step back and understand that a lot of this is sort of a game of tariff high-low, right? So at the bottom, when we saw capitulation, panic really, and the global weighted tariff rate based on Liberation Day was well above Smoot-Hawley, 25% or thereabouts, we thought it was a good time to buy. And frankly, now here we are on the other end of it with this court ruling overnight, and the tariff rate is, implied back towards, close to what we started the year at certainly sub 5%. And we know that Trump has said many, many times how much he likes tariffs. So the ultimate landing spot is still in the middle. And to us, you've got an expensive market with a relatively high degree of uncertainty, and it's not really the time to add to risk in our view.
Well, it's so interesting because we'd heard from a lot of business executives saying, hey, whatever the tariff rate is, just tell us what it is. Just give us some certainty. Is this good or bad for business? Because presumably he can't use the emergency powers anymore. He can still go through other venues, but that will take months to try to implement the tariffs. Months of presumably uncertainty, which businesses, again, don't like.
Well, to be clear, it may not take months to implement new tariffs. So there are certain things he can do. Section 122 is one of the things that he can refer to. But what it will, to your point, is it will keep the uncertainty uncertain. So in a way, it's good and bad because obviously the all-in tariff rate, and the market is telling you it doesn't like tariffs. So there we are, but again, Trump has been telling you for years that he does like tariffs.
Is there any sort of left tail that needs to be priced out, this idea that he can suddenly put tariffs on? Is there any repricing to be done there, or at these levels, have we already kind of discounted that?
No, I think that the market reaction overnight really speaks to, if anything, more of a lack of sellers, because frankly, active investors missed a lot of this move. The degrossing that we saw at the bottom in April was never fully regrossed, and this is a bit of a reflex move. And so the risk to the tariff level gravitating back towards that 10% baseline, or perhaps higher when you think about China, is definitely there. And it's like you're going to hear more about it probably in the next couple of days.
So this idea of, hey, maybe we dust off the playbook we had before this, of American exceptionalism, of inflation starting to wane, of the Fed's cutting, we get back to normal programming, too soon to do that?
Well, except for there is one part of that playbook that really makes a lot of sense to us. We have been, huge proponents of AI-driven stocks and themes, really the way forward. They led the bull market into this peak in February. They were the worst hit stocks during the downturn. They have led since April 7th. That's where we want investors to concentrate their exposure.
Oh, I'm so glad you brought this up, because we did get NVIDIA earnings yesterday.
Oh, that.
And I think you and I both expected that that's probably what we would be talking about this morning, if not for that. Did that help reinvigorate that? Does that give you the confidence that the next leg is led by AI?
No question. And because the thing is, when you look at their results, it wasn't entirely intuitive that the stock was going to rally, and that was before we got the tariff news. But investors stepped back, and what they saw was anything that was caused by a shortfall due to restrictions on sales to China was made up elsewhere. And that speaks to the power of the AI revolution. And when you think about how those stocks have traded the last 6 months sort of sideways for the most part, while earnings continue to grow, it remains a secular growth story that we and our collaborators at your old alma mater, University of Virginia, have done a lot of work on, and we think it's a theme that's worth concentrating on.
My favorite collaboration of 2025, without a doubt. And you know I love that, Julian. So if tech leads the next leg higher, let's talk about the other end of the market, and that is small cap, still about 16% away from all-time highs, whereas the large cap is about 4%. What needs to happen to revive that trade?
So from our point of view, small caps are sort of in the so bad it's good category, is that basically they've been left behind for the most part, because if you think about smaller companies, they are price takers, not price makers. So the fact is that tariffs are more punitive in an environment where the labor market has really only started to begin to loosen up. And of course, yields have been a headwind. But from where we see it is that all of this in aggregate takes away the probability, that left tail of a recession. It's always been our base case. The market is coming around to that, and that in and of itself means the credit markets stay open, which is another thing that is beneficial for small caps.
Julian, what a morning. Thank you so much for joining. It's
Pleasure.
so wonderful to try to navigate it with you. Julian Emanuel of Evercore ISI. All right, let's get you some other top stories that are trending on the terminal this morning. As we've been discussing, a major blow to President Trump's trade agenda. The U.S. Court of International Trade has ruled that the president's global tariffs are illegal. It said the administration wrongly invoked a 1977 law in imposing his, quote, Liberation Day tariffs. The administration said it will file an appeal. The U.S. plans to aggressively revoke visas for Chinese students with connections to the Chinese Communist Party or studying in critical fields. That's according to Secretary of State Marco Rubio. The U.S. will also enhance scrutiny of all future visa applicants from China and Hong Kong. And Elon Musk's time as a special government employee has come to an end. In a post on X, Musk thanked President Trump for the opportunity to reduce wasteful spending. His effort to reduce government spending began with an ambition of cutting $2 trillion, and before that, downgrading to $1 trillion and then $150 billion. Coming up, we do get to talk more about NVIDIA. A sigh of relief. Julian Emanuel was just discussing the AI trade. We're going to get even more from HSBC's Frank Lee, who's called the numbers good enough. Hey, we'll take it. That's next on your Bloomberg Brief.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
But what mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
The Chinese competitors have evolved and advanced greatly over the last year. Like everybody else, they're doubling, quadrupling their capabilities every year, and the volume is increasing substantially. And remember, these are data center chips; they don't have to be small; they could be quite large. Without American technology, the availability of Chinese technology will fail the market.
NVIDIA extending gains in the pre-market after it eased concerns of a China slowdown, saying that the AI computing market is still looking at exponential growth. Joining us to walk through the numbers is Matt Bloxham of Bloomberg Intelligence. Matt, what was the takeaway?
Yeah, I think a relief surprise for the markets, resilient revenue in the quarter. And I think even though probably the China headwinds are blowing stronger than people thought, so about 8 billion of sales headwinds in the Q2 that's going to come, I think the market was looking for about 5 billion. But despite that, the guidance range for Q2 sales, which midpoint's about 45 billion, in line with where consensus is, and the gross margin also in line at kind of around 71-72%. So I think that was reassuring, and underpins what you were just talking about with your previous guest, that the AI story is still very much a structural growth story, and there's huge amounts of demand outside of China to kind of make up for that headwind they're facing there.
What about on China? Because this had been really the big concern of what did China sales look like? Can they get back into this market? What replaces it? What did we hear from NVIDIA?
Yeah, I mean, I think certainly in the short term, the ability to get back into that market looks very, very low, and it may even be that they're closed out of it permanently. Obviously depends a lot on what the US administration decides to do about restrictions there, because they don't have anywhere to go with the existing H20 chip to kind of depower that anymore. He did talk on the call about some other options they're looking at, but we'll have to wait and see whether they play out. And I think importantly, what he said was that Huawei's capability matches already the H200 chip, which isn't far off NVIDIA's kind of leading edge offering. So I think it's going to be very hard for NVIDIA to compete in the Chinese market from here unless all restrictions were taken off by the US administration. I think that looks incredibly unlikely, and we've also heard that there are restrictions on AI software going into China too. So that just, I think, adds to the complexity of doing business in that market. And for me, the kind of risk is, as someone like Huawei gets more momentum, they potentially become a more significant competitor to NVIDIA in markets outside of China. So that if I was running NVIDIA, I'd definitely be concerned about that and making sure that I was looking down as much share and business as I could outside of China to keep that moat high.
Matt, really appreciate it. That is Matt Bloxham of Bloomberg Intelligence. I'm pleased to say joining us for more on NVIDIA is Frank Lee, Global Head of Tech Hardware and Semiconductor Research at HSBC, who has a hold rating on the stock. He has raised his price target to 125 from 120 post-earnings. Frank, great to see you this morning. I got to say, I love this in your note. No beat and raise, but good enough to avoid disappointment. How good is good enough?
Yeah, so I think what's different is that if you look at the numbers themselves, they're not noticeably different than the last couple of quarters. They just met numbers and I think the overall consensus. But what's different was, I think, going into this quarter, there was a lot more fear and concerns that they would miss the uncertainty around the loss of the China business, as your previous guest just said. And I think they met it. They met the numbers. And I think people walked away feeling much more at ease that was going to be the case, that there wasn't going to be much of a downfall from the back of that. They did recognize that they're going to lose about almost something like 15 billion in revenues in the first half alone because of the loss of the H20. But that being said, I think they gave some reassurances that their Blackwell ramp will continue to improve, which we do expect is the case. So I think that was good enough for the market to feel somewhat at ease.
Frank, did you and do you see a path for NVIDIA to seriously get back into Chinese markets?
Yeah, so I think contrary to some of the market belief, we actually do expect that they will be looking to get back into the China market. We have started to see some signs in the supply chain that there is another AI GPU NVIDIA is targeting potentially for China market that will meet all the US restrictions. Potentially they will be taking out the high band memory and using a more lower end memory spec to get back into the China market. We think that could help claw back some of the revenue loss from H20. It won't make up for all of it, but I think there's a sense of urgency, as you can see from Jensen's comments, that he wants to be back in the China market.
Yeah, absolutely. And I also saw this in their 10Q, which I thought was pretty interesting yesterday, Frank. This is what they wrote, that regulators in China are investigating whether complying with applicable US export controls discriminates unfairly against customers in the China market, going on to say that if they were found in violation of that, they could be subject to financial penalties, restrictions on our ability to conduct our business. Is there a real risk that NVIDIA not just gets hit from US regulators, but that it becomes this political hot potato and China also imposes some regulations, some financial liabilities too?
Yeah, I mean, I think that's a concern that has been out in the market. But the way we look at it is that NVIDIA still offers the best and most competitive solution today. And I think if you look at Jensen, he has been quite vocal about support of the China market. In fact, he went to China as soon as the H20 restrictions were announced. So I think he has shown that he is quite committed to try to work with both sides in order to make something work here.
Yeah, I mean, he's been quite vocal about not just that, but also to your point to the U.S. saying that China's got ahead of us in AI and we need to do something about it. Frank, at the same time, I know before the earnings, when you had joined Bloomberg TV, you had talked about some of your concerns, the China ban coming earlier being one of it, but the ongoing supply chain issues being another area of concern for you as well. Did NVIDIA do enough to address that in your mind?
So I think there's been interesting debate, especially for investors in Asia who's closer to supply chain. We continue to see a gap difference between what's happening on the downstream ODM assembly level versus what has they're able to ship on the upstream. Now, NVIDIA has talked about improvement. The rack numbers are continuing to improve, but we still think there will be some sort of a gap that still needs to be monitored. So I think that's going to be one of the things that we will watch very carefully. We do think that they're not 100% out of the woods yet in terms of the supply chain issues.
One of the other things we learned was just this massive cash pile that they've been building, $53.7 billion. That's up from $31.4 billion a year ago. Frank, we've seen them have a lack of opportunities when it comes to big deals. What would you like to see them do with that cash? Should we start clamoring for increased payouts in the form of bigger dividends, stock buybacks? What happens in that cash pile?
Yeah, it's a good question. I think, some of these companies have started to talk about buybacks. NVIDIA hasn't really yet. I think that's an option that they could do. They are really printing money right now. And so I think, that's going to be one of the options that's available to them is just to, how much to give back to investors from a dividend point of view. Could they do buybacks? These are all possibilities, right? And I think they're in a good position now because, there's not a lot of cash outlay that they need to put out. And so I think, so far business has been strong. So I think that's something management can consider as well.
Frank, thank you so much for joining us. We really appreciate it. Your voice is one of our favorites here on NVIDIA, Frank Lee of HSBC. Now, coming up, we're going to get you set up for your trading day. We got some Fed speak, retail earnings, all on deck. We'll catch you up on what to expect on your Bloomberg Brief.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading day today. We're going to have more retail earnings, AM East, Bath & Body Works. All of that will come before the bell this morning. Then core PCE, personal consumption, and jobless claims data. That comes at 8:30 a.m. Eastern. And we're going to get Fed speak throughout the day. Barkin, Goolsby, Kugler, Daly, and Logan. Now, for your movers this morning, NVIDIA, that is extending the post-earnings gains. That's leading chip sticks higher. We're just hearing from, frankly, of HSBC. It was good enough to allay market concerns. Cadence Design Systems up 5.2%. It is rallying. It closed down 11% yesterday after reports that the Trump administration is ramping up China chip curbs, maybe with some court powers being instilled over tariffs. It's making us rethink what happens to the chip curbs. Finally, HP, those shares down nearly 8%. It plunged after cutting its profit outlook on tariff concerns. But how much are companies now going to have to readjust yet again their outlooks if the version of Trump tariffs that Trump has put in needs to be re-examined? Well, in the meantime, we are buying now and asking questions later. S&P 500 futures are up more than 1% this morning. In fact, up nearly 1.5%. Not a huge rally, all things considered. The dollar is somewhat stronger. We have seen weaker dollars. Does this make us want to go back into U.S. assets? But maybe not duration. 10-year yields still down more than 5 basis points this morning. It's interesting, the first initial reaction has been concern again on the fiscal front. Does this mean less tax cuts if we don't get tariff revenues? All right, that is it for your brief. Surveillance will take you through a busy morning from here.
A number of games overseas in recent years, and in fact, you opened the season going to the opening game in Brazil. So do you expect to do more overseas games, and is that a part of your strategy?
It is. We had 5 last year. We expect to have 8 this year, which will be the highest we've ever had. Our hope would be at some stage to get to 16 games in the next few years. We think we can do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television. You need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Tech is still where it's at, and I know that right here is the best place to do that.
We think there are some very macro, strong tailwinds ahead of us.
Corporate America's healthy, and it's called a business cycle for a reason.
There's just been some uncertainty in the market. You can't argue that.
It's probably a bumpy road ahead. It will come with some volatility.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday, it's risk on. A U.S. court upending President Trump's Liberation Day tariffs. A blow for the White House, which plans to appeal immediately, throwing negotiations with major trade partners into total disarray. As markets digest what is and isn't covered by the ruling.
So let's go over what we do know. The ruling covers the 10% baseline tariffs, the 25% tariffs on Canada and Mexico products, as well as the extra 20% on China and reciprocal tariffs. Okay, that's a lot. It isn't necessarily covering auto tariffs, also aluminum and steel, as well as the other potential, a couple on the margins, some of the other tariffs. Question here is, why is the market rallying at all on this? Because there does seem to be a check on just how far the president can go. Why is the market rallying more? Well, it still shows that the president has abilities to put tariffs on in different ways.
Here's the take on Wall Street so far this morning. Jordan Rochester of Mizuho. It's a small deviation along the same path, same end goal. This from Goldman Sachs. For now, we expect the Trump administration will find other ways to impose tariffs. That seems to be the takeaway so far this morning.
Absolutely. This is a detour to the journey, but the end destination is clear. The president will get the tariffs he deems necessary, especially part of this negotiating process with other countries. And the court ruling, page 34, even gives a nod to another law that the president should have used, Section 122, which is one of these tools that potentially they're going to use in the short term before they do a 301 investigation. The president has a menu ahead of him. He just needs to decide what path he's going to take.
There's a lot of items still on that menu. The president hasn't responded to this yet. I imagine we'll hear from him a little bit later on this morning. We'll also be catching up on this program at 8:45 Eastern Time with Peter Navarro. And I imagine Mr. Navarro's got some thoughts on the matter as well.
Yeah, the White House's official comment has been, we do plan to appeal this. It could go to the Supreme Court. It probably will take longer than the 10 days that the administration has to comply with this ruling. I do wonder going forward, though, what this does in terms of taking off some of the tail risk, of limiting what kind of powers the president could invoke in order to go full throttle ahead with some of this. The three-judge panel, just want to point this out, it was an of-the-court decision. They didn't give a breakdown of the votes, but there was one judge who was nominated by Reagan, one by Obama, and one formerly by Trump, who was recommended by Robert Lighthizer. So this isn't exactly a group of super liberal rogue judges, and it is harder to dismiss.
They have the issue with the using of IEEPA, and basically what they're saying is this is unbound in the tariff authority, and they think this has gone beyond the tariff authority. What I will say is there is one big question, though, if you are a retailer this morning. The court ruling said vacate, which basically suggests some of these companies that paid the tariffs will actually get refunds. But immediately in the White House appeal, they asked for a stay of the decision. Basically, they want to keep the tariffs in play while this goes through the court, while the appeal is basically saying, actually, the tariffs should come off. So in the next 10 days or so, this is going to be really critical if you're one of these companies that is paying tariffs, this import tax, at the border.
The market response pretty clear at the moment, at least. We're positive by 1.3% on the S&P 500. Coming up this hour, we'll catch up with Marvin Lowe of State Street as reciprocal tariffs hang in the balance. Angela Zeno of CFRA with NVIDIA earnings reigniting AI optimism. And we'll speak to Bob Michael. Counting down to jobless claims in just a few hours' time. We begin this hour with our top story. The president, tariff strategy stuck in legal limbo. Joining us now is Bloomberg's Tyler Kendall in Washington, D.C. Tyler, what's the latest?
Yeah, hey, John. So this three-judge panel found that the Trump administration essentially wrongly invoked IEEPA, the International Emergency Economic Powers Act, to impose their so-called reciprocal tariff plan. The administration had argued that persistent trade imbalances amounted to a national emergency, but the court said that that didn't meet the bar or the standard for what they call an unusual and extraordinary threat under the law. Importantly, this extends to other instances where the administration has invoked IEEPA, including when it comes to Mexico and Canada, as well as China, on the basis of concerns about the U.S. border and fentanyl. Now, it does not extend to those tariffs that have been implemented under Section 232, those sector-specific tariffs like steel and aluminum, as well as autos. And importantly, this is really the first time that a president had used IEEPA to invoke tariffs in this way. And the court said that it would have been unconstitutional for Congress to essentially give what they called unbounded tariff power to the president to do such sweeping levies. Now, John, at the end of the day, it is unclear how quickly this will go into effect. The court has given the administration 10 days to essentially work out the administrative moves to ultimately pull back those tariffs. But the White House says that they are going to appeal this immediately, and there's a chance it could end up in front of the Supreme Court.
Well, Tyler, in the actual appeal and the actual court document, they basically argue that they should have just used a different legal pathway to do these tariffs. What kind of options does the White House have right now?
Right, definitely, Anne-Marie. So there's a few on the table. One, of course, is Section 232. We're still expecting the administration to invoke tariffs when it comes to chips and also pharmaceuticals under these powers, essentially for the administration to declare a national security crisis. The other one is Section 301. This would allow the administration to look into some investigation when it comes to unfair trade practices. But of course, there would likely be a delay there as they have to put into effect those inquiries. And then you mentioned another one at the top of the show, which is Section 122, which could allow the president to put tariffs into effect up to 15% for 150 days, but he would need to declare a balance of payments crisis. And with the recent moves in the bond market, it's unclear if that's something this White House would be willing to do.
Tyler Kendall with the latest. More from Tyler later on in the program. Tyler, thank you. Here's the view on Wall Street this morning. Marvin Lowe of State Street writing the following: while trade comments are still volatile, it's easier to make a bet that they will settle well below the worst case. Marvin joins us in the studio. Marvin, good morning. Good morning. Let's take a beat. To what extent does this compromise the president's end goals? And does this lead, in your mind, to a step up in macro expectations?
You know what? I think that the uncertainty that we're all faced as investors, as well as the uncertainty that really corporate America is dealing with, hasn't really changed. We know the administration is going to push back. They're going to push back hard, and we're still not going to have a lot of clarity on whether it's a universal, whether there's step-ups, whether VAT is included, and that will impact corporate spending, in my mind. At the same time, if we somehow can push away tariffs in the short term, we know that retailers have a tendency to really front load if they can. We saw that in the first quarter. Does this impact a really fragile consumer view, at least going through the summer? It makes data much more volatile. It already has been volatile, but kind of that really negative consumer sentiment that's out there is driven by inflation. And if the impulse isn't as great as kind of all of the hyperbole for the last 6 weeks, we could build upon a more resilient consumer.
We ask this question: what has actually been established by this court ruling, given the fact that the president still has the ability to put on tariffs in other types of measures? Is there some level of tail risk that has been taken off the table as a result of an institution pushing back in such a concrete way?
Yeah, I mean, I think if we kind of look at the cadence of that first week of April, certainly the market was shocked on Liberation Day. It was more shocked on Friday. It was even more shocked the following weekend. It was really the punitive tariffs that really seem unhinged to a certain degree. That scared everyone. It was like, how, to what end can this get to? This, to me, if anything, pulls a little bit of that unsteadiness out of the market.
You talked about companies possibly retrenching some of their spending planning, and yet what we're seeing from a lot of the earnings reports so far are much better than feared in terms of both their deliveries, Only 3% actually withdrew earnings guidance going forward. There's this feeling that corporate America has managed to be resilient even in the face of this uncertainty. How much is that your takeaway?
Yeah, I mean, I think Tom King says it all the time. Companies figure it out. You know, that's why we ultimately invest in these companies. We expect management to figure these things out. At the same time, you know, I would point out that earnings estimates came down by about 50% kind of during that period since Liberation Day. You know, second quarter earnings are now somewhere in the 3.5% range for the S&P. They were 7% before April. So Wall Street has been required to make changes. They didn't know what to make, but it certainly wasn't going to be up afterwards. Does that wind up creating an environment where the second quarter can more easily beat? It doesn't really answer the kind of longer questions, more intermediate term questions, but for the short term, you've got, you know, news that is attractive for expectations as they were in the worst of the worst.
Given the fact, though, that this court has pushed back on Trump using IEEPA, do you think he'll come back with even higher tariff levels, almost a little bit more of like vengeance?
You know what? I am not going to be in the business of guessing what this administration will push back on. They will push back, most certainly. And, you know, the president himself has said he uses these large numbers as a negotiating tool. If he's lost some negotiating power as a result of this, you know, if there are other avenues available for him, I would expect him to use those.
If he lost negotiating power, how do you think about the current negotiations right now? How much leverage do these foreign governments have?
I mean, I think the fact that it's taking so long, and again, trade negotiations generally take years, so we're trying to compress it down into months. So, you know, the inability to do it is not necessarily surprising, but certainly what we've heard from the UK is not really a trade deal. And some of the easier Asia countries, if you will, based on their trade balances, have not really put anything on the table either. So, you know, they are pushing back.
Marvin, before you go, NVIDIA in the pre-market. Let's get to that too. It's a factor behind the rally we're seeing this morning. A big factor. The stock is up by more than 6% in the pre-market. Do you see the path of least resistance for this market still being higher?
Yeah. If going into the summer, yes. You know, data, the administration, trade is so volatile. But at this point, I think that we've really seen the worst case. A lot of estimates are based on those worst cases, and we're going to walk it back.
Morgan Stanley have pointed out we've gone from abysmal to not so bad. I'm paraphrasing here, but ultimately, does positioning speak to that? Do we still have positioning offside to the extent that we can actually rally from here through the summer?
That really is a large part of my thought process. We get to see positioning data kind of based on the platform that I work on, and positioning is much cleaner at this point. So yes, you're able to build because the big move over the last couple of months was to get to neutral, to find some safer water, to figure out which way you want to go.
Marvin Lowe of State Street. Marvin, appreciate your time, sir. A lot to get through. NVIDIA this morning higher by more than 6%. We'll bring you some of our conversation with Jensen Huang a little bit later. Equity futures on the S&P 500 doing nicely as well. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. As you've been discussing, a U.S. court has blocked many of President Trump's tariffs on imports from dozens of countries, declaring them illegal. The court said that the administration had wrongly invoked a 1977 law in imposing his Liberation Day levies. It now sets a 10-day deadline for them to be stopped. The White House said it will appeal the ruling. Now let's get a check on those NVIDIA shares. As you mentioned, higher by 6.5%, a beat on first quarter results. NVIDIA also said it expects revenue of about $45 billion in the second fiscal quarter. That despite new export restrictions costing about $8 billion in Chinese revenue. The U.S. will start revoking visas for Chinese students with connections to the Chinese Communist Party or studying in critical fields. That escalates Washington's push for greater scrutiny of foreign students at American universities. The Trump administration will also revise the visa criteria for all applicants from China and Hong Kong. And that's your brief. John.
Hey, Danny, thank you. Appreciate the update. More from Danny later this hour. Up next on the program, Trump's tariffs in legal limbo.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And, you know, if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that.
The latest on trade coming up next. We'll catch up with the former senior Trump trade advisor, Kellyanne Shaw. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance. Equities doing nicely this morning, up by 1.2% on the S&P 500, a mix of a setback for the president's trade strategy and also NVIDIA earnings after the close yesterday doing nicely too. The Nasdaq 100 up by 1.7%. Lots of commentary from those of you on Wall Street, including Max Kettner of HSBC, with this to say: this ruling calls into question any hard data weakness that we may see in the coming weeks, which might easily be dismissed as being pre-deadline and pre-ruling, and therefore as stale old data. The path is cleared for further risk asset gains, in our view, and we see that so far this morning. Under surveillance this morning, Trump's tariffs in legal limbo.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number, and because I gave the European Union a 50% tax, you call that chickening out?
Here's the latest this morning. A U.S. court declaring the Trump administration wrongly invoked a 1977 law in imposing his Liberation Day tariffs. The White House saying it will appeal. Joining us now is the former senior Trump trade advisor, Kellyanne Shaw. Kellyanne, welcome back to the program. Neil Dutter of Renmac writing this morning. Tariffs are a dial, not an on and off switch. And if you think the judiciary gets to be the one to turn the knob, seek help. So, Kellyanne, it raises the question: what does this mean for the president's strategy?
Yeah, good morning. It was certainly a big night last night in Washington, or a big morning this morning if you're waking up to the news that the CIT did declare that those executive orders imposing the reciprocal tariffs as well as those fentanyl tariffs are invalid. Now, I do have to agree with that comment. This was not the president's only avenue for imposing tariffs. And the story here is not done. There's going to be an appeal. The U.S. government has already appealed this decision. But the president has a menu of options to choose from when it comes to tariffs. And in the decision itself, the court actually pointed to one of them, which is Section 122. And in finding that IEEPA did not justify the use of these reciprocal tariffs, the court said the president should have used 122 if he wanted to impose these tariffs. So that's certainly an option for the administration as well.
When it comes to 122, I was also struck by that. The court in the ruling is basically telling the administration this is a different avenue. Legally, you will have more success. But 122 can only last for 150 days. What would happen next?
Yeah, and this was a debate among trade experts before the president announced his plans on Liberation Day about what authority should he use in order to justify some of these tariffs. Now, 122 is interesting because it does get to this balance of payments issue, the fact that other countries are exporting more than the U.S. is importing, and some of these economic factors. But as you said, it is time limited to 5 months. It's also time or value limited to 15%. So that may be one reason why the administration didn't use it in the first place. But you could impose theoretically a 15% tariff across the board on all countries for 5 months, while at the same time initiating something like a Section 301 investigation or Section 232 investigation. He also has Section 338, which he could use to potentially justify tariffs. And again, the story's not over on IEEPA. This is going to be challenged in the courts, and we'll see what the Federal Circuit says about this and whether or not they agree with the CIT.
Well, the immediate appeal from the White House asked for a stay on the decision. When will the tariffs actually be lifted?
Right. So the way that this order is drafted gives the administration 10 days in order to implement this restraining order on the tariff collection. Now, what the administration has done is they've appealed it to the federal circuit. They have also filed a motion for stay with the CIT, and in both instances have said there's going to be irreparable harm to the United States, to its foreign policy and national security interests, if you don't stay this judgment while this case is being appealed, meaning if you don't allow us to continue to collect tariffs. So we will find out from both the CIT as well as the federal circuit in the next days or weeks as to how they feel about that motion and whether or not they're going to grant the administration's request. And that will determine whether or not these tariffs will continue to be collected or not after that 10-day mark. So we don't know yet. We're waiting for the courts to tell us.
Kellyanne, being a negotiator during phase one trade deal with China in Trump's first administration, what does this do for the negotiators right now that are dealing with a host of countries that are trying to get to a deal with the United States?
Right. Well, I do think it definitely throws sand in the gear in terms of how those negotiations are happening. And this was the calculus that a number of countries were making, that either by the end of July, the president was going to run out of political capital in order to sustain his tariff strategy, or there was going to be action in the courts. But, you know, I think it would be a little bit foolish for countries to just assume that this is over for the president. Again, this is getting appealed to the federal circuit, which previously had justified the use of tariffs under IEEPA back in 1974 in this Yoshida case. And the administration thinks it has good footing in terms of its legal arguments for using IEEPA. And of course, the courts will tell us whether or not they agree with that. But because there are other legal options, not just IEEPA for the president, I think you can safely assume that the president isn't going to give up on the use of tariffs and these tariff threats with other governments. So I think the negotiations continue. I just think there's a bit of an asterisk there for countries who may be waiting a bit to see how the court comes out on this.
The process is going to take a lot longer than some of the deadlines initially suggested. Kellyanne, if you were advising a company on how to arrange their business, how to invest, how to plan in the next 6 and 12 months based on some of these timelines and these ongoing negotiations, what would you tell them?
Yeah, I don't think that much has changed in terms of how companies should be looking at the tariff landscape. Because again, even if these court cases continue to proceed in a way that does not support the administration's objectives, there are other options for the administration, and I don't see them backing down. So from that perspective, I do think that companies should still plan for a high degree of uncertainty and should see whether or not some of these negotiations with major trading partners land in a way that would take down that tariff temperature and help give a little more stability and certainty in terms of some of these investment decisions. So while this is huge news, I don't think that it changes the chessboard that much in terms of how companies should be looking at the next 6 months.
There's a bill right now in Congress that could potentially, if passed, give President Trump a lot more leeway to take the lead with respect to forming tariffs and not having any kind of legal challenge. How much comfort, I don't know, however you'd want to phrase this, should corporate executives have that it hasn't passed, and that frankly there's been a lot of pushback among Congress members, Republican Congress members, who are feeling the pushback from these tariffs in their regions?
Yeah, and the dynamic with Congress has been really interesting. And right after Liberation Day, there was that resolution of disapproval where a few Republican senators actually voted with Democrats to oppose some of the tariffs on Canada and Mexico. And so there is a little consternation on the Senate side, but I don't see that same dynamic on the House side where Republicans are also in the majority. I think that trade bills are just hard in general, whether they're pro-tariff or anti-tariff. They're just really hard to get across the finish line, which is why the executive has been so powerful in terms of taking some of these actions over the past several decades when it comes to tariffs. They've really been in the driver's seat. So I don't really see that dynamic changing just yet. I'm not sure support for this bill or lack of it really indicates whether or not Congress is going to get involved. I think right now they're also in this wait and see position, but this is a very dynamic environment and we'll have to see how all of this unfolds.
Kellyanne, thanks for jumping on for us this morning to explain a lot of this. The former senior Trump trade advisor, Kellyanne Shaw. Anastasia Amoroso of iCapital will join us a little bit later, calling this a setback, a roadblock, but one ultimately that can be overcome.
Yeah, and that's what Kellyanne said. This is sand in the gear. So maybe it slows down some of those negotiations and slows down how quickly the administration wanted to use their tariff authorities, but they're just going to find other measures. And what I find so fascinating and obvious in this court ruling is the court ruling basically tells the administration what next lever they could pull. Section 122, that's the direction of travel, at least for 150 days, to potentially open up investigations with 301. So Jordan Rochester put it great. Small deviation along the same path, same end goal, tariffs are coming.
Which is why you see equities fading just a touch. Still positive though, Lisa. We're positive by 1.1%.
Yeah, and how much has to do with NVIDIA? The idea that companies adapt and adjust, and that even though the tariff threat still is outstanding, there is a feeling that companies are moving forward. It also makes me wonder how much companies are going to double down on just wait this out. See how long this takes, see how long they can push out some of these potential tariffs, and keep their plans that they've had in place for a long time.
Not just companies, but countries too.
Exactly.
This really complicates negotiations potentially in the coming weeks as we approach that July 9th deadline. Equity futures on the S&P 500 up here by close to 1.2%. Up next, we'll catch up with Angelo Zeno of CFRA with NVIDIA earnings reigniting a lot of AI optimism. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function. It's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
your gains brought to you by NVIDIA and 3 judges at a US court. Equity futures on the S&P positive by 1.1%. On NVIDIA, that stock is flying. The Nasdaq 100's high by 1.6%. With that stock move and more, let's cross over to Danny Berger. Hey, Danny.
John, you read my mind. Let me show you exactly what NVIDIA is doing. It is higher by 6% in the pre-market trade. They reported earnings, not the crazy beat and raise we're used to, frankly, over at HSBC. Called it good enough. I don't know, this reaction is a little bit more than good enough. $45 billion is the expected revenue for the fiscal second quarter, despite that $8 billion expected hit from China. So if those tech earnings were good, HP earnings were very bad. The computer maker cutting their profit outlook for the year, those shares down nearly 8.5%. The issue is twofold. For one, they talked about their supply chain. They want to try to start rerouting things away from China into a lot of emerging markets like Vietnam and Mexico. And they talked about that demand for computers might be lower because of tariff uncertainty. But if you are a company, do you wish you could go back in time and kind of adjust things given the court ruling? That's at least what some investors are expecting for companies like Best Buy. It is one of the best performing S&P 500 stocks so far this morning, and they are going to be reporting earnings this morning. We haven't even heard from them yet, and those shares are up just under 5%. The focus for them had been tariffs. What do margins look like? Do they need to raise costs to consumers? Are we going to get an even wider range of scenario analysis? Either way, really interesting ahead of those earnings that there already is a lot of optimism injected into the shares, John.
Hey, Danny, thank you. More from Danny later this hour. On our radar this morning, our top story, a US court upending President Trump's Liberation Day tariffs. The ruling could eliminate new tariffs on imports from China, Canada, Mexico, and other countries. The White House saying it will appeal.
It could eliminate. We don't think it's going to. The president has a number of tools and options that he can use. Even the court in its ruling basically tells the president, you could have done this legally under a different law, Section 122. So basically, it's a wait-and-see game, and there's going to be a lot of questions waking up this morning on when the tariffs could potentially be lifted, and then the president could use another law, or given the fact that the White House is asking for a stay. So basically, these tariffs could stay in place until it likely reaches the Supreme Court. These are the kind of questions the market's going to have to be dealing with, but the direction of travel is very clear. The president wants to use tariffs, and he will get his tariffs.
At the same time, when you take a look at the language of this ruling, it isn't exactly comforting to the president. It talks about how it would be unconstitutional for Congress to delegate, quote, unbounded tariff power to the president, to the executive branch, saying an unlimited delegation of tariff authority would constitute an improper abdication of legislative power to another branch of government. So it did go further than just talking specifically about, hey, maybe use this provision and try this and you could do this. It did say there are constraints on what a president can single-handedly do when it comes to rearranging trade.
It certainly has the potential to slow them down, which speaks to the market move we saw overnight. Check out this move too. NVIDIA higher in the pre-market by more than 6%. The chip giant delivering solid sales guidance and saying there is still, quote, exponential growth in the AI computing market.
The fact that they took an $8 billion hit to sales because of some of the restrictions in China and still maintained their guidance speaks to the strength that you're seeing for this particular company. A real question here, the existential question really is, as we were talking about yesterday, China, and how much they can remain in that market. And that remains a question on both sides, both with U.S. restrictions and with Chinese restrictions on where they can go. And it raises a question, and it's really a deeper question, and we'll get into it, I'm sure, later, which is how closely intertwined do you want to be at a time where technology is evolving very quickly there as well as it is here?
I found the timing of all this last night so interesting. As Jensen Huang was talking to Ed Ludlow, that is when we had the court decision come out. And Jensen Huang called Donald Trump's tariff plan to reindustrialize, bring onshore manufacturing back to the United States, utterly visionary. At the same time, the courts are saying, actually, you need to tweak this because we think it's illegal.
He's playing both sides quite well at the moment, isn't he?
Yep, absolutely. I mean, he gave basically 2-3 minutes to everything he likes what this administration is doing, even though, to Lisa's point, they had this huge write-down because of the market share they're losing of those H20 chips in China.
Stock is higher in the pre-market by more than 6%. We'll come back to that in just a moment. Elsewhere, the White House cracking down on the sale of chip design software to China. Sources telling us here at Bloomberg, the Commerce Department sent letters to some of the leading software designers last week, telling them to halt shipments to Chinese customers.
This goes to this question of how do you prevent the AI establishment, development, in China at a time when a lot of people are worried about copycat technologies and just who's going to win this race, because ultimately it is a race. And that's kind of what I was getting at with Jensen Huang and what he was talking about. In his conversation with Ed Ludlow, he said with half of the world's AI researchers based there, China, the platform that wins China is positioned to lead globally. And when they are locked out of China, that means that, frankly, domestic producers have the ability to catch up and gain share. So it raises a question: do you want to decouple in this crucial industry, or do you want to keep your enemies close, right? Keep your friends close, keep your enemies closer.
And Jensen also talked about the fact that these competitors have evolved. And something he said to me a few weeks ago, he related to Ed last night. Huawei is, quote, quite formidable. That is not going to be the tone that this administration wants to hear as well, that Huawei is now quite formidable. And that's why Jensen Huang is basically saying they're already on par with us, so we should be there.
Ed is going to drop by a little bit later. We'll catch up with him at 8:15 Eastern Time. Let's stick with NVIDIA. Reigniting AI optimism after beating earnings expectations.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Joining us now to discuss, Angelo Zeno of CFRA, was a buy rating and a $165 price target on the stock. Great to catch up with you, Angelo. Let's just start with the basics. What jumped out for you yesterday afternoon?
Yeah, I mean, I actually think you guys hit it in terms of, the China side of things. I think that's where all eyes were going into the print. And we saw them really kind of navigating the uncertainty, from China right now, and that $8 billion in lost revenue in terms of the guidance extremely well. We're not necessarily surprised by the fact that they're navigating it really well, because if there was a company that could do it right now, NVIDIA would be that company because of the immense amount of demand that they're seeing right now. I'd say the other thing right now is just the commentary surrounding these reasoning models, right? I think, back at GTC, Jensen was talking about potentially 100x, 150x, increased need for compute from these reasoning models. I think he even went as far as going somewhere along the lines of 1,000x on the call last night. So you're kind of seeing the fact that there is just an enormous amount of demand from the shift to AI agents here that we think will continue to ramp in 2025 and into 2026. And that is given really NVIDIA some really strong momentum. And, not to mention Blackwell is this really kind of shift towards, the infrastructure and the system side of things, completely different from what we saw in Hopper. And I think the upside we're seeing from Blackwell is stronger than I think most analysts here had anticipated.
There was a lot of positive discussion around NVIDIA's performance. There also is this existential threat, and you talked about it with China. This question of if there is some sort of decoupling and regulatory overhang, can NVIDIA continue and maintain its model? And Jensen Huang came out and said you cannot underestimate the importance of the China market. This is the home of the world's largest population of AI researchers. The company that wins China wins this war. Do you think the market's overly complacent about the risk that NVIDIA gets locked out of that country?
Well, I think there's two sides to this, right? I mean, I think one point here with regards to China is they've essentially de-risked China in many respects, and I think that's the side that the market is taking right now. It's like it's one of those situations where, all right, we took the $8 billion hit. It was more than we thought was going to take place here in the July quarter, but we're not going to see another quarter where China's going to be a huge negative headwind for this company looking ahead. But that said, the other side of this is when you kind of look here 2-3 years down the road, it is a huge opportunity cost if they can't get back into China. Our belief is that they will be able to get back into China at some point in time. I think the market also has expectations, just given the move we're seeing here, that eventually NVIDIA will be able to find its way back, whether it be, from, some sort of deal that the administration creates, or whether it be some sort of, maybe performance-laden type of chip that they can somehow find their way through into China, albeit, at significantly lower revenue potential than what they could have gotten. But nonetheless, I think there is, just belief out there that eventually NVIDIA needs to find a way back into China. Jensen isn't giving up on that hope that China will be a part of their business in the future. So I think that's why the stock is moving the way it is as well.
Do you think that the ruling that happened overnight really built on that belief in markets that NVIDIA will find its way back into China?
Yeah, I mean, listen, I think when you look at just semiconductors in general, I mean, they're largely exempt from all this tariff-oriented stuff as well. They do fall under the more sectoral semiconductor investigation that we're waiting on right now. I think some of the comments that you guys earlier alluded to in terms of Jensen supporting the whole the tariff situation, I think is partly due to the fact that he is trying to position himself really well in terms of semiconductor manufacturing in the U.S., not to mention a lot of the servers that he's making are coming from Mexico. So he's almost kind of insulated, at least for now, from some of the uncertainty and some of the commentary that we've heard overnight or even over the last month or two tied to a lot of the country-specific tariffs that we've heard about.
We do have the Trump administration, though, moving to restrict the sale of chip design software to China. Yes. And what the reports basically suggest is this is a choke point. They want to cut off at the start where China can get access to this type of technology. But you sound optimistic that NVIDIA can still make its way back in China. How, when the administration seems to be clearly saying we are going to decouple when it comes to national security concerns?
Yeah, I mean, listen, I think, and in that EDA software, ban that we're seeing here, I actually think, it actually took longer than we anticipated. We expected to hear it, sooner than that. It'd also be interesting to see how aggressive the administration really wants to get here. I mean, there are other, levers that they can throw out there tied to the semiconductor equipment industry, for instance. So we'll see how far the administration wants to go with this. But as far as NVIDIA is concerned, I think ultimately, the administration has a price for anything, as long as they can kind of get their terms on the deals. So I think NVIDIA is going to be a hot topic when the two sides try to come together and have conversations in the coming weeks and months. So that is why we personally believe that there is potential for NVIDIA to kind of get back into China. Not to mention, we do think the administration isn't necessarily against NVIDIA selling into China as much as, especially if they can somehow, cut the expansion efforts for the local semiconductor industry out in China. So we'll wait and see. There's going to be, I think there are a lot of moving parts here, and you never know what's going to come from the administration.
Angela, let's just finish on that point. Getting access and granting access to NVIDIA chips is becoming a foreign policy tool. It's something we discussed on this program just yesterday. What kind of characteristics does that introduce to the stock and how it trades?
I think that's a great point. I think it's a potential catalyst here for the shares. I think there's more upside than downside from that. You kind of look here over the next couple of weeks, months. I think you're going to see more kind of Saudi Arabia-oriented type deals, sovereign AI-related deals. You've got Jensen himself saying he's going to be traveling out to Europe here over the next couple of days. So it'll be interesting to kind of see when the timing of more announcements come tied to sovereign AI. But even Colette, alluded to the point yesterday that you are going to see more, more sovereign AI-oriented deals. It's just they wouldn't tip their hat on when you're going to see these deals.
Angelo, appreciate your time, as always, sir. Busy night for you, I'm sure. Angelo Zena there of CFRA with NVIDIA, nicely higher in the pre-market. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Goldman Sachs says that the court ruling blocking President Trump's tariff is only a temporary setback to his trade agenda, and it can't be offset by other taxes. The bank says the ruling holds 6.7 percentage points of levies announced earlier this year, and that the White House could use other tariff tools to make up for that. Elsewhere, Anne-Marie mentioned this, the Trump administration moving to restrict the sale of chip design software to China. Sources telling us that the Commerce Department sent letters to some of the leading providers of electronic design automation last Friday, telling them to halt shipments to Chinese customers. Elsewhere, Elon Musk's time as formal advisor to President Donald Trump has come to an end. Musk posted on X, as my scheduled time as a special government employee comes to an end, I would like to thank President Trump for the opportunity to reduce wasteful spending. By law, Musk's status as a temporary government official was set to run out as soon as tomorrow. And that's your brief, John.
Danny, thank you. More from Danny in the next hour. Up next on the program, the data driving the bond market.
Once you see economic data start to move around, that tends to drive bond markets more than supply. I think in the next few months, you are going to see some of the hard data start to moderate. You may even see soft data recover.
Up next on that, Bob Michael of JP Morgan Asset Management, live from New York City this morning. Good morning to you all. You're watching Bloomberg TV.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
A U.S. court overnight potentially upending the president's Liberation Day tariffs. The take on Wall Street at the moment. This from Jordan Rochester of Mizuho. In politics, when there's a will, there's a way. Tariffs haven't gone away. Equity futures fade just a touch. We're positive still by 1.1% on the S&P. On the NASDAQ, we're up by 1.6. Under surveillance this morning, the data driving the bond market.
Once you see economic data start to move around, that tends to drive bond markets more than supply. If you see economic data start to soften a little bit over the course of the next couple of months, you could see rates move materially lower, even as term premium stays higher. I think in the next few months, you are going to see some of the hard data start to moderate. You may even see soft data recover, but maybe not to the levels that you saw before all this uncertainty started.
So here's the latest this morning. Investors are waiting another read on the state of the labor market, with initial jobless claims due out in just under 2 hours' time. Bob Michael of JP Morgan Asset Management writing the following: in the end, it's all about jobs and the labor market. With the Fed generally looking past near-term inflation data, the labor data becomes the motivating factor. Bob joins us now for more. Bob, good morning.
Good morning.
Good to see you. We've got a lot to get through, so let's start with growth. Do you think this bond market should be pricing in a step down in growth or a step up in growth?
I think probably a step up in growth, and that seems to be what they're pricing in today. We were looking at effective tariff rates yesterday morning were about 15%. Today, when I read Mike Sembla's stuff and you look at where the courts came in, but you assume the 232 section tariffs go through, you're talking about 10% effective rate. The economy could absorb that. And then you've got Congress. You've got the budget reconciliation package, which we estimate adds another $3 trillion to the deficit over the next 10 years. So there's an upward impulse to growth today.
Does that make you revise some of your expectations for how high yields can go? Because what you just expressed was resilient growth, the idea that the Fed can't cut rates as easily if the data doesn't roll over as quickly, and the idea that supply is going to be coming out at a time where inflation could potentially stay sticky.
Yeah, let's start with the Fed. We looked at the minutes yesterday. Our AI program, let's call it Kelsey, determined that there were 13 references to inflation expectations, whereas there were 3 a couple months ago at the March meeting. So the Fed is clearly focused on inflation and keeping inflation expectations anchored. As you think about the way things could play out, you're looking at higher prices first that may create demand destruction, which then causes you to raise the probability of recession. But you have to get through the higher prices and see how businesses and households react to that. Now you've got to enter Congress, and Congress is trying to push through not only extension of the Tax Cut and Jobs Act, but incremental spending. And you have to gauge, will that offset some of the impact of the tariffs? And it looks like it probably will.
I don't know how Kelsey Barrow feels about being sort of connected to a ChatGPT program. Kelsey, if you're watching, please write in and let us know what you think. I am curious, though, whether you have upgraded your expectation for yields. You didn't answer that because you had expected yields to be going down much more significantly when there was this overhang of potentially slower growth, the drag from tariffs, the drag from policy uncertainty.
Yeah, I'd be happy if yields held in around here. I think there is going to be an upward impulse because first we're going to see higher prices, and then it does feel that businesses and households can absorb that, and you're going to get some package out of Congress, which will help to offset some of that. I would say my greatest frustration of the last year is we hadn't actually been higher. I would have loved the 2-year to have been anchored around the Fed funds rate, 4 3/8%. I would have loved the 10-year to be at 5%. To me, that would have been a relatively normal curve, and yet we still have the 2-year and the 5-year trading below the Fed funds rate. So it makes it challenging for clients who want to get into the bond market. I'm still not having a single conversation with clients about wanting to get out of the bond market. It's all about where do we get into the bond market and how.
And it's all about the belly of the curve, which is what we saw yesterday in the auctions. They went very well yesterday for the 5-year. Today we've got 7-year. How closely are you watching to see, particularly with longer duration, whether you see a repeat of what happened in Japan, in the United States, with real pushback about long-term bonds?
So far, we're not seeing that. We're seeing flows coming in to the U.S. bond market from overseas, and we are seeing the long-duration buyers, pension funds and insurance companies get interested, particularly in longer credit. So we're not seeing it. Certainly, Secretary Bessent has a couple tools. One is to either cancel or dial down the 30-year auctions, and that's something we heard out of Japan. It's something we saw out of the UK. That would certainly help to stabilize the long end of the market.
Cancel or dial down? You think there's real potential for that in the US?
100%. 100%.
Do you see enough in the market right now to force that kind of corrective action?
Treasurers are telling us, if there's no demand, why am I selling? I don't need to do that. And you've got a Treasury Secretary who has put out there, we're focused on the long end of the curve. We're focused on the 10-year. By the way, I think he's right. I think you've got to look at the mortgage market. You've got to look at the housing data. That's another bit of data we're watching. Housing should be fairly strong at this point in the cycle. It's not because of housing affordability, and mortgage rates are a big part of that.
So is that a strong argument to re-engage with the long end of the curve right now?
Okay, I quoted Kelsey. I'm going to quote another one I've heard you quote.
Please do.
Priya Misra.
Sure, love Priya.
10 and 30-year part of the curve are risk assets. I don't want to be the one to stand in front of the steamroller right now. So I'm just going to pack into the intermediate part of the curve. There's lots for me to buy there in credit and in securitized and in foreign bond markets. I'll let somebody else help
That
stabilize
sounds
the
like
long end.
you think it needs to get worse before it gets better.
I'm concerned that it's going to get worse before it gets better.
Can you describe what worse looks like?
Yeah, if I start with the 10-year, I think going to 495, we've been there, the market can support that. In my mind, where pain really starts to get felt is a 100 basis point shift up from where the steady state was. And the steady state's been around 440. So once you break above 5%, if we get to 540, that path between 5 and 540 becomes almost unbearable for bond investors. And I've lived through those 100 basis point shocks before. It always seems to be 100, and then things tend to stabilize. Where does that put the long end? You know, add another 25 basis points on top of that for the 30-year. To me, that would be real pain. You'd need to see policy response, both from the Treasury and from the Fed.
Bob Michael, this was fantastic. Deeply thoughtful stuff. A special thanks to Bob Michael, to Kelsey Barrow, to Priya Misra of JP Morgan Asset Management, and maybe Secretary Besson's listening a little bit as well this morning.
Yeah, potentially Secretary Besson is listening. What we do know, to Bob's point, is that this administration is squarely focused on the 10-year yield, and they want to see it go lower, and they definitely want to see mortgage rates lower.
We're focused on the equity market this morning. It's doing better, up by more than 1% on the S&P. Up next on the program, we'll catch up with Barbara Duran of BDA Capital Partners, Libby Cantrell of PIMCO, Dan Ives of Wedbush, and Michael Zezas of Morgan Stanley. The second hour of Bloomberg Surveillance is just around the corner.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment. Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Literacy is a big problem in the United States. I think 14% of adults are functionally illiterate, which means they can't read past the 4th grade level. That's a large percentage of the population. Nothing the Library of Congress can do can completely solve that problem, but are you surprised at how many people still cannot read in this country, and how many people have another problem called illiteracy or illiteracy, right, which means they can read, but they don't choose to read?
It's a challenge with the digital age because they're reading on tablets, so we do count that as reading. If you have an e-book, you're reading the book, and I've been often asked, if I'm listening to a book, are you reading? Does that count? But there is a concern that the amount of reading, actual text that people are doing, is diminishing. And so how do you work with other organizations? So the Library of Congress connects to public libraries, school libraries, and we do joint programming with them.
Why do we actually have all these thousands of libraries anymore when people are often doing things digitally and they don't need to go to a physical place to get a book?
People are using public libraries and someone has said, as opportunity centers. And libraries are offering collections that are beyond books. So libraries are circulating and responding to communities in so many ways.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
The trade issue is not going away, right? We're going to have tariffs. Trade policy is still quite a problem for most folks.
That 10% tariff doesn't look like it's going away.
So what we're seeing is the opposite of globalization.
At the end of the day, what does Donald Trump always want? He wants investment in the United States.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures positive by 1.1% on the S&P, up nicely on the Nasdaq by 1.7%, up also on the Russell. The small caps rallying by 1 full percentage point, driven in part by these words. The worldwide and retaliatory tariff orders exceed any authority granted to the president by IEEPA. The words of the court overnight.
Yeah, this is the trade court in Manhattan that ruled against his use of IEEPA emergency actions and powers to enforce some of the tariffs, not all of the tariffs. The commentary on Wall Street has been basically this is a roadblock. We've talked about this. It's not that necessarily we're going to see the path change. Nonetheless, it at least extends the time frame and gives people the sense that maybe companies have some more time to rearrange their supply chains before they get hit particularly hard.
This was one of the biggest questions I have this morning. They're given 10 days, the White House, to basically complete the formal process of halting these tariffs. But the White House is appealing that the decision stays, the tariffs stay as this works to the court. So that's something that businesses will need to deal with this morning, whether or not, are these tariffs actually going to stay in 10 days or not? Then you need to ask, if they're not going to stay, what path is the administration going to take? And what I find so fascinating about this court ruling is that the court ruling gives the administration a path to take. It tells them, here's another legal venue you can take in Section 122. It's 150 days only, but it's a bridge for the administration to figure out the remainder of their tariff policy.
It took a while, a number of hours, to process the decision and what it could mean, but overwhelmingly, I think the consensus building on Wall Street around the following. This from Goldman: they'll find other ways to impose tariffs. And I wonder, if we didn't have this move on NVIDIA this morning, just how positive equities would be on the S&P 500 off the back of that headline. NVIDIA this morning, Bramo, positive by more than 6% after earnings yesterday.
They reaffirmed their guidance, even with an $8 billion hit in China, talking about the idea of immunizing themselves from the risk of increased regulatory pressure and a decoupling between the U.S. and China. What I find interesting is that these stories are linked, that there is a belief, as we were hearing the last hour, that actually NVIDIA will still get back to China, and that if they can't get back to China, then you do have to reassess things. But ultimately, people feel like you'll really get this sense that there isn't going to be a bigger decoupling. How much is that belief underpinning some of the strength that we have continued to see, regardless of any court rulings?
And whether or not they can get back to China. Jensen Huang on the analyst call was basically saying we're considering making another chip. But they don't know yet if they're going to. And if it's not the H20, what chip could they make that would be export control compliant with this administration that actually is ratcheting up when it comes to the curbs going to Beijing on a lot of these licenses?
That stock bouncing this morning by more than 6% so far. More on that a little bit later. Coming up this hour, we'll catch up with Barbara Duran of BDA Capital Partners on a risk-on mood, Libby Cantrell at PIMCO on the future of President Trump's trade agenda, and Dan Ives of Wedbush as NVIDIA eases China concerns. We begin this hour with our top story. Stocks higher as a U.S. court compromises the president's Liberation Day tariffs. Joining us now is Tyler Kendall of Bloomberg down in Washington, D.C. Tyler, let's talk about to what extent this does compromise the president's strategy.
Yeah, hey, John. Well, as Kellyanne Shaw said on this program earlier last hour, this basically is sand in the gears, but at the end of the day, it slows it down, but it doesn't mean that tariffs are going away. What the court did was it found that the Trump administration improperly invoked IEEPA, the International Emergency Economic Powers Act, to impose the so-called reciprocal tariff plans. The administration had been arguing that persistent trade imbalances amounted to a national emergency, but the court said that didn't meet the standard standard for an unusual and extraordinary threat in order to invoke the law. Now, it also extends to those other instances of IEEPA, including tariffs on Canada and Mexico, and also China, invoked on the basis of concerns over the U.S. border and fentanyl. But it doesn't extend to those sector-specific tariffs that have been put into place under Section 232 over national security concerns. And while it might slow down the process, at the end of the day, John, it's unclear exactly when this is actually going to take effect. The court has given the Trump administration 10 days to work out sort of the administrative moves that need to happen in order for the tariffs to be removed. But the White House is appealing this decision. They want an immediate stay, and there's a chance that this ends up in front of the Supreme Court, which means it's going to take time to make its way through the system.
So the president has said he has a number of potential trade negotiations in the hopper, his words. What does all of this mean for those current talks?
Right, that's going to be one of the big next questions here. Do our trading partners decide to sort of hold back here and wait to see if this gives them any more leverage, or do they continue with these negotiations, considering that when we do talk about these other levers that the administration can pull, it's really there's no doubt that tariffs are still going to remain in place here at the end of the day. And think about how some of these trading partners, like the European Union, are getting hit particularly hard when it comes to those sector-specific tariffs like steel and aluminum, as well as autos. One of the big questions here is what's going to happen to the agreement that's already been put into place when it comes to the United Kingdom and that 10% levy that's supposed to stay in place.
Tyler Kendall with the latest down in Washington. Tyler, thank you. July 9th, the key deadline. A key self-imposed deadline for the discussions with trade partners, and I just wondered to what extent, to what degree, it does compromise those talks in the weeks to come.
Does it mean that that deadline gets pushed back, or potentially does it mean that the administration, especially if they get the stay and they can keep these tariff levels, that they want to actually accelerate the talks and get to a final deadline?
All of us just glued to social media this morning, waiting for the first word to come from the president at some point. Here's the view on Wall Street. Barbara Duran of BDA Capital Partners writing, still ahead, which means more volatility, more tariff announcements, and the ongoing tax bill/budget negotiations. Barbara joins us now for more. Barbara, good morning.
Good morning.
How much of a game changer is it, what we saw overnight?
I think there was an initial, and you see it in the futures last night, we're up 400 points. A lot of excitement, hope that this really is a game changer, but I think, that we're quickly learning there's so many options that the administration can employ, and whether the appeal, and we don't know how that's going to translate in the next few weeks. Things get on hold. There were supposed to be these big tariff announcements, as you just mentioned, this week. We don't know what that means. So in terms of uncertainty, nothing's really cleared up because they will fight it tooth and nail. And so we're still going to have tariffs of some level, and maybe it means they're going to be less. I don't know. But that's this doesn't clear it up. So today we're going to have, in combination with the great NVIDIA earnings yesterday, we're going to have a good day, but it may be short-lived.
I want to build on that. This idea of dissecting, and John referenced this earlier, how much of the gain that we're seeing in markets is due to NVIDIA and, frankly, other corporate earnings that have been pretty positive versus a court case, especially given the fact that you're not seeing that commensurate move in the currency markets to the degree that you would expect.
Yeah. Now, it's interesting because NVIDIA and the semiconductor AI plays have really disconnected from the market, in the last 6 months. So it hasn't been a bellwether for the market. However, it is a bellwether for AI and all that. So I think it's very positive. We're just ending the first quarter earnings report. It's 96% have reported, 78% have beat earnings estimates, and there's been some cuts and some cutting of guidance, but not a lot. So you're starting to see second quarter, estimates in early March were about 9%. We're now down to about 5%. But still, things are positive. We have great forward momentum in the economy, and everything that's coming in, jobless claims, CPI a week ago, and of course we have PCE tomorrow, is showing things are good. The tariff impact has not yet fed through the economy. And of course you saw the consumer confidence numbers, just a couple days ago, big jump up. It shows, and that's really, I think, this lessening and the China 90-day pause, because obviously China is very key for all this. So
yeah, if your head's spinning because all of the narratives are kind of collapsing on top of each other and very difficult to piece out, join the club. You talk about better than expected economic data, and we do see the Citigroup U.S. Economic Surprise Index going to the highest levels going back to February. I just wonder if the takeaway from the past couple of weeks, including the court case, including the potential delays, is that the worst case scenarios have been taken off the table, that the tail risk has been curtailed in a significant way that can give you confidence to come up with some sort sort of strategy for the rest of the year.
Yeah, I think that's definitely the case, and that's where you've seen, this has been a rapid rebound. When you've seen the market off 15% from its highs and such a rapid recovery, we're not yet back to the highs, but, the history shows that typically 6 months out, you could be at new highs. So this is very positive. It's been very bullish action, this last week in this recovery. So I think the worst case is definitely off the table, no matter what happens in the court case and if it drags out. But I think that's where it's giving people a lot more confidence. The question is now, obviously at 21 plus times forward earnings, we're well above the 5-year and 10-year average for the market. So where do we go from here? I think it just means more volatility. We're going to still be, captive to headline risk, which, this one is case in point. And so what's tomorrow's going to be? But I think it's a problem. I think the market, has probably some near-term upside, but there's a trading range here.
When you see headlines like this, and the Wall Street Journal this week had a front page story that analysts are saying we're past peak uncertainty when it comes to trade. Do you agree with that? How is this past peak uncertainty?
No, it's a great point. I think what they're really saying is we're not doing the 130, 140% tariffs on China. So we're past those draconian. It also looks like Trump, every time it gets to that, he is backing off. This whole taco thing.
Don't call him a chicken.
I know. So anyway, yeah, I think we're not past, we may be past peak uncertainty in terms of fear of what it could all mean and how disastrous, the worst case could be. So that would be, we're past that. We're not going to see the economy collapse. And I think that was it was on the table. I mean, people were upping the recession risk.
Aren't we priced for that now in equities, moving away from the end of the world?
No, we are. Well, no, we're not priced for that. And we are priced for it in the sense that if we've taken that off the table, the market has recovered. The question is, where do we go from here? And I think we'd have to see. We'll see what happens with inflation, but it's really now more about growth. And it's hard to see where the stimulus is coming from. It's certainly not fiscally. We've got to see what the Senate does with the budget negotiations. If they can rein in the deficit, which is also a problem on the long end and bonds. That's hard to see, rates coming down. We've just got too much supply we've got to issue.
You don't think the fiscal stimulus offsets the tariff drag?
No, we don't have the fiscal stimulus. I mean, we're going to see a lot more of this onshoring effort, which is already happening. That's been happening since COVID. And everybody said, oh my God, we've got to get more reliable, supply chains here. But, the fiscal stimulus in terms of government spending, no, that's not going to be there.
Barbara, appreciate your time. It's good to see you. Thanks for dropping by. Barbara Duran there of BDA Capital Partners. Equity futures doing okay, positive by about 1 full percentage point. A major slice of that, though, a big piece of it, is this rally we're seeing in NVIDIA in the pre-market. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Some breaking news in the past few minutes. United Airlines has signed a partnership with JetBlue that will let travelers use loyalty points and book flights